Morning, everybody. How are we doing? Morning, Ladder. Morning, Shroud. Morning, Diamond. Happy Monday. Another week. Another week in paradise. I'm just running a quick back test this morning. I'm just going to try a new set file on DAX this morning. Not on M5. Oops. Somebody's been sending me messages over the weekend, one of the members of the group. I'm not going to say who he is. But he's been doing a lot of testing on the opening range breakout EA, and he's come up with some amazing looking set files, which I will share partly in the group. I don't want to share his set files because he's using them on prop. And I don't want anybody using exactly the same settings as him. Affect him. But they are very, very, very tight risk scalping strategies, producing phenomenal results. My only concern is I'm not sure you're going to be able to get the trades on. And I get the feeling intra-candle spreads and things are going to take you out. But I'm going to test one of them this morning. And we will see what happens. So I was just running a quick back test before I ran it, just to verify. So 161k off of $2,000 in drawdown. See what I mean? It just seems too good to be true to me. But we're going to test it. 67% strike rate. Average profit is only $52. It's going to get stopped out a lot for very small amounts. But it's going to get some decent winners as well. So what's the risk I set on that? Oh. Got that wrong. I'm going to do that. One sec. Let me just rerun this test quickly. So, yeah, sorry, I'll let that run. I'll have a look at that in a sec. But how long we got? 5 minutes, the open. So, recap of last week. Blech. Horrible. If you take the NAS trades I did last week out of the equation, it wasn't actually that bad. I did make some loss on NAS last week. 100, 200, 300, sorry. 230, 330, 430, 330-ish. A couple of scratches. 330, 430, 530, 580 odd. Because this is me basically testing the NAS. There's a couple of winners there. But overall on the NAS last week, kind of made a bit of a loss, which is kind of what this is. So it kind of wiped out the profit on the other trades. But this is me testing on a new account. So it's going to have days where it's just not going to work. So just got to take that into account. But overall, all the FX stuff worked really well last week. The only thing I've got an issue with at the moment is this US dollar last week. Obviously, we had non-farm payroll. Non-farm payroll went absolutely mental. I say non-farm payroll, it was the unemployment figures. But obviously, we went totally the wrong way. So I've taken a bit of loss this morning, as you can see. It's only just under 0.5%. It's nothing to write home about. Bear in mind, this is a 100k account. Yeah, so losing $500, $400 is just 0.5%. It's nothing. Took a couple of losses this morning. I haven't posted these in the Telegram group, but it was these ones here. Actually, it was only 2 this morning. It's these 2 there. So I've got in fairly aggressively on this. The EA is getting me into it as well, as you can see. I wanted to get in aggressive because I don't think this is right, this move. This is totally against the fundamentals at the moment, and I think it's a fake move, and I think we're going to unwind this whole thing this week. Remember I said on Friday, as we were pushing and pushing and pushing up into this zone, I said, well, maybe they'll push a little bit higher and try and take this liquidity. When we got there, I was like, well, they're going to go for that. It's obvious. They've done that this morning, and look at the rejection we're getting this morning. So this is a liquidity run on last week's high. Everybody that shorted this last week because they were long US dollar is liquidated. Me being among them. thing that worries me slightly is we're on side with retail now, which is worrying. Remember, we looked at this on Friday, Euro US dollar. The vast majority of people were long on this. Yeah. Now look at it. The entire world is now short, which means that there is a lot of liquidity to the upside. So I'm hoping the markets are actually going to give us some profit. You know, retail does win. There is a certain point, you know, you get, it's like the old thing with, you know, extensions on RSI and things like that. They'll embed it, and there'll be people getting slaughtered in here trying to short this, short this, short this. Eventually, a load of them will win. It's going to happen. It's just a case of, are we on side this morning, or are they actually going to drive for a couple of days? I don't know. So we'll see. Very important session this morning. But all the fundamentals came out last week positive for the US dollar. Absolutely everything but the PMIs on Friday. So we had negative services PMIs, everything else positive. We had talking heads positive. We had everything US dollar plus. And obviously it absolutely tanked, which is the news. It's what happens, isn't it? So having a quick look at what we've got this week, we've got a bank holiday in Japan today. And again, when you get these days with bank holidays in Japan, we tend to get masses of liquidity in the market. We tend to get big days. So I'm expecting an ADR day today. So that's happening today. Apart from that, there's no other news today. So there's nothing to move the market really, apart from the fact that it's all one-sided out of Asia. We've got Macklem, Kuroda and Powell all talking tomorrow. Big players. Obviously, Powell and Kuroda talking about these two guys, biggest currencies. And then we've got CAD. We've got CPI for the Aussie on Wednesday morning. And then we've got the CPI figures for the US. So we've got the inflation figures coming out for Australia and the US, which are the core things. And then we've got GDP for the pound and University of Michigan, which doesn't really do a lot of the time. But so it's a fairly light news week in respect that there's not a lot of it. But what we have got is big. So we've got GDP figures and CPI figures, which are all obviously leading indicators which are going to affect bias. So we'll see what happens this week. But yeah, it's going to be a busy one, I think. After last week, there's going to be a lot of people being murdered on the US dollar. So we will see. Over weekend news, I had a quick flick through this morning. I couldn't see anything over the weekend that made any sense. Sunak came out last week and said, we are committed to halving inflation. And then he came out over the weekend and said, it's not a certainty we'll be able to reduce it. But we must be disciplined. Basically, what I read into that is, remember what I said last week about definitely taking inflation from 10 down to 5? Well, I'm going to try really hard. That's basically what he's saying, isn't it? And even if we do get inflation down, the cost of living with mortgages and everything else has gone so far up, it's going to make absolutely bugger all difference. It's all coming down. Pound's in trouble. But the positive is obviously inflation rates will increase. So pound's actually, although we're in trouble economically, it's a mixed bag from a Forex perspective, because higher interest rates is very, very good for a currency, obviously, because they put a load of money in there. So we need to look at really, when you're looking at interest rates, we look at the differentials, and we're looking at the difference between the two. So when we look at the pound at the moment, market's just opened. So we look at the pound at the moment, we're sitting at 3.5. That's got at least another % on it. But all that's going to do is catch up with these guys. So we've had a weakening pound. Well, we've had a pound actually moving up a little bit, haven't we? But I think we're going to go like that, even with the inflation rates coming up. These guys aren't, interest rates coming up. These guys aren't going to be dumping their interest rates anytime soon. So what it's going to do is have a poor economic output with a low GDP and high unemployment with the same interest rate, which again is going to be negative pound against everything. So I don't have much hope for the pound moving forward this year, but we will see. We got that parity as well, that parity level to look for on the pound, which we came and tested. Well, we almost came and tested it with Liz Truss's monstrous budget. We weren't far away down here. So I reckon we can have a run on that this year. But we'll see. Right, so let's have a quick look at DAX. Oh, there's a big opening range going in this morning. So this set file, this is a really interesting set file. So I'm running the normal set files that I'm running on the other accounts. So these other accounts will just trade the set files they're set up to trade. This one is an interesting one. I'm not going to give you the exact settings for it, but what it does is it trades the 5-minute opening range, and then it takes the 5-minute to the 10-minute, and then it takes the 10-minute to the 15-minute. So it's trading the 15-minute opening range. But the idea behind this set file is that it should help with whipsawing at the open. So if you were to get a 5, 10, 15 opening range, right, it's not going to get massively whipsawed out of it because it's going to take 3 different opening ranges in 15 minutes. So it's a play on the strategy. It's another variation on it. Sorry, no, it's not the 5, it's 10, 15. It is it's 5, it's the 10 to the 5, the 10, 10 to the 10, 15, and the 10, 20 to the 10, 25. So we're taking a range, we're taking a trade. We're taking a range, we're taking a trade. We're taking a range, we're taking a trade. So it's a little bit of a variation on it. And let's look at the test results, see what that came out as. Jesus Christ. This is what rings alarm bells for me. I've been around in this game a long time, as you know. When something looks too good to be true, it usually is. So we're returning 100% on the account, $215,000 profit in this case, on a 12-month period with a $7,000 drawdown. It's phenomenal, this set, but I'm going to just export those results and we're going to stick them. I'm going to stick them in the quant analyzer to have a look at them. Yes, I know I'm using the free version. So there's the opening range gone in. Right, so this uses really, really, really tight stops. And I'm talking like 5 pips. Yeah, and it's also working on tick. So when we take that, we're just immediately going to tighten everything up. It's all going to tighten up really tight. So the idea is behind this particular strategy, this is a scalping breakout. So what we're looking for is if it doesn't do that and like not do that, right, in one candle, I'm talking one candle, obviously we've got a candle here. This candle didn't just go like that. It went like that, and then it went down a bit more, then it came back. That sort of candlestick is just going to stop out. Candlesticks we're looking for are the ones where we open like this and we have very little movement apart from that. So if you look at this on the 1-minute chart, it would go like that. If it goes like that on the 1-minute chart, we don't work. It doesn't work. We don't win. We get lots of tiny little stop outs. But we get in and out and in and out and in and out until we grab that candle. At some point, there's going to be a propulsion move. What this strategy does is it grabs those propulsion moves and banks them. And has an awful lot of very, very tiny, tiny, tiny wins of 5, 10, 15. And my problem with it is, and what I think is going to happen in live environment is, first of all, if you're using commissions, if you're an E8, for example, you're dead. Yeah, because the commissions on these trades alone is not going to be covered. Secondly, if you've got any kind of spread widening, you're dead. And if you get a load of choppy moves, you're just going to have lots and lots and lots of losses, which is going to annoy people. But we'll see. So we'll see how it trades. If I stick that in the quant analyzer, just want to check there's no personal data in that quant analyzer. It's not. Oh my God. Okay, so we just about to go short. So let's just continue. Let's go in a sec. Right, so we're short 2. This also takes 2 trades at the open as well. It uses 2 stops. It uses one which is a tick based and one which is percentage. So this is a tick based stop and this is a percentage of opening range based stop. If this works, I'm not going to be on anymore, by the way. I won't be doing any more live streams. I'm just going to stick this on a very large personal account. I'm not going to talk to you anymore. Just let you know. But just let it known that I am the person that discovered the Holy Grail. Well, I'm not actually. It's this guy in Telegram. I'll have a chat with him later. I don't know if he wants me to give his name out or not, which is why I'm being a bit cautious. But he's not on this stream because he's in London, in America. So, but I'll go down in infamy as the person that created the EA that found the Holy Grail. There you go. Let's just see what that does. But yeah, if we look at this quant analyzer on that. Drawdown 7,500. Monthly average return 14 grand. This is on a 100k account. 67% win rate. Return on drawdown ratio 20. I mean, there you go. So we're out. We're stopped outlook already. What? 100? That's that problem somebody had, isn't it? How did that take 100? Sure. At 10:07. Oh, we might have found a bug. This is because the stops are too tight. I know exactly what this is. I know exactly what this is doing and what this bug is. And I know how to get rid of it. I'm going to take that off. I've just tried to take a add-on trade down here with a 2.5 pip stop. So the lot size on that is far too big. It's to do with the add to trades. That's what the problem is. Right, I'm just turning that off. So what would have happened there is you would have got that. Yeah, forget that bit. You'd have got that. That's what that is. That's add to trades. It's trying to add a trade where the stop is way too tight. That's actually not that bug. It's that the other guy reported. That is just literally doing what it said. I've just tried to get a 2.5 pip stop trade on, and obviously the broker doesn't allow you to go above 100 lots. So, but yeah, looking at quant analyzer, let's just let that run. So on the other EAs, obviously I am one short there, and I'm one short there at the moment as well. So yeah, so tiny little drawdown, 3% on the entire account, returns 100 and something K profit. Return on drawdown ratio. I mean, strategies I've developed in the past, anything from 1.5 to 3 is gold. It works. It's brilliant, amazing. Yeah, put that together in a portfolio. You get 5 strategies with a 1.5 return on drawdown ratio together. You've got something that's going to work. 28 is unheard of. So this is what I mean. These statistics are off the scale, and this has got to be tested live to see if we can actually get these trades on. But you can see what it's doing. You know, it's returning big profit. There's all the trades. Equity chart. Sorry, I haven't used this for ages. So there's your increases. So every green dot there is where it's increasing the portfolio value. So you had stagnation in there. Let's put some stagnation on. So maximum stagnation on the strategy is 23 days. So there's 23-day period where it didn't make money. So one of those months, pretty much one of those months, basically, it didn't work. But the rest of them it did. And obviously we've got a very steep curve. So if you take this out of the equation, because this is obviously having a lucky run at the moment, that's your standard equity curve on it, which is really good. But we've got to see if this actually works in the real world, which is, again, back testing is great, but real world is where we live. Order type doesn't really help. So yeah, looks good, didn't it? Anyway, we'll see. So we've got 2 more sell stops in there. Yeah, she's placed another 100. Why is it doing that then? There's some... Sorry, bear with me a sec. I'm just trying to figure out why we're getting such a high lot size entry on the pendings. Stop size. It's this, we can't do this. See, this is the thing. You can't execute these orders. Well, you can execute them. You're just going to lose on them very, very quickly. It's not a bug, Sompelu. It's actually doing what it's designed to do. 2.5 pip stop. It's not a bug. It's a 2.5 pip stop. That is the stop. Look at where the stop loss is on the trade. So tight. Right, so we're in short on it. We're stopped out on it. See, the stop's too tight. It's not a bug. That's what it's been designed to do. You can't execute the strategy. See, this is the difference between back testing and live testing. In back testing, I've got to turn this off because this is my valuation account, and I don't really want to blow it on a test. Yeah, basically you can't get these orders on. The ones you get, when you get that order on and it goes like that, you're going to make 2-3 grand, but you're going to get stopped out so many times with tiny little losses. It's just not going to work. Well, I don't know. We'll have to have a play on it and optimize it. But I just wanted to live test it this morning because it's interesting when you get somebody who sends you something like that. Looks like that on paper. But when I said in a message, I said, you're just not going to execute those. If you had a broker like E8, look at my E8 broker, for example, and the commissions. Yeah, and these are on like this sort of lot size. When you would need with that strategy to place 30, 50, and sometimes much bigger lot sizes on that. You're going to be paying $100 in commission. Make $50 on it because the tight trailing stop. You're just going to get killed, aren't you? So anyway, tight stops. Stop you out. Was the backtest done with standard tick data or tick data? So he did it with standard data on an FTMO account. And then I replicated his original set file on tick data, and I got 2/3 of the results that he got. So I still got a massive positive. His return was something like 400K. I got 130, 100 and something K. So I still got a very good positive return. But it's too tight. The stops are too tight, and that's why it works. Yeah, if you think right here, if you put an order on there and suddenly this spiked down, right, and you got a 57 lot order on there, and it spiked down to there, and then it suddenly started trailing, and this thing just had, big candle followed by big candle. You're sitting in 5K down there, and you're going to they're going to be brilliant. And even if it pushes down and then it retraces back up again, your trailing stop is going to get you out. But the problem is, and this is what I said, you're going to get candlesticks exactly like what we're having play out now. This is the real world. Candlesticks do that and that. And this is where you're going to get killed. So I just can't see it working in the real world, but I don't know. We'll see. It's definitely a an argument for having a super fast scalping opening range breakout, where literally all you're looking to do is grab a very fast move. I think that's definitely something worth looking into. So just closing out of this candle, just trying to grab a 1-to-1 return, or 1.5 to 1 or 2 to 1 return, or something like that. But anyway, we'll see. So yeah, I'll leave that for the morning. Too dangerous. So there you go. I'm $1,200 down now. So that was a good test. That lost me $600. But again, it's only 0.5%, so not the end of the world. We need some of this FX stuff to start actually moving. Right. So let's start off with ADRs today. So there's only one so far today, New Zealand dollar Swiss, which has come straight off of ADR. That was quite a gap down this morning. So straight off of ADR and reversed. We've missed that. That would have been in Asia if you're awake in Asia. There's your reversal alert. You've had 20 out of that, so it's a third of an ADR. So there's nothing else there. Obviously, the weeklies are flat. There's nothing hit monthly either, even after all that volatility last week. All the volatility last week obviously was like that. So we didn't actually go anywhere on most things. So we haven't hit any monthly ranges to look at yet. And obviously there's no weeklies because it's the first session of the week. So that's the only thing, and it's already gone. So there's nothing to look at on the ADRs. On the RSIs, we've got the Aussie dollar Swiss. So that is nicely extended on the 4 hour. So if we look at the sentiment on the Aussie dollar Swiss, I can get there. That's range bound, so you can take that really in any direction. There's no real fundamental bias either way on the Aussie Swiss. From an intraday sentiment perspective, it's a negative, so it's a sell. So that looks like a pretty good RSI extension. You've missed the alert on it again this morning. It's come down already. 15-minute, we've just had it. So 15-minute, you could look Aussie Swiss for a short. If we come back up maybe into this propulsion gap, that may be a good place to take a short from up there. But overall sentiment is neither way on that one. So as you can see, it's just it's been in a lovely area range of balance there. We had a little price discovery down there, failed, back up into balance again. We're coming back up into these highs, which is what's being rejected at the moment. So not a bad spot to take a short from, Aussie Swiss. I'm too short Aussie already, so I can't take that, but that looks good. I like that. And if you're going to position trade it from there, you've got up to the top there, you've got 54 pips, which is just under an ADR. ADR is 70 on this. 35 is half an ADR. So these highs here are between a half to a full ADR. So if you got in here and it still pushes up and comes and retests these highs, you have a second position in there and then short it back down into this propulsion gap. So looks good, but you've missed it this morning. So you're jumping on a little late. You can look at it on the hourly. Obviously, you just had the reversal alert, but then you're looking at daily for bias. So just horse has possibly already bolted on that one. Hourlies, we've got quite a few. So we'll whiz through the hourlies. So Aussie dollar yen. That's extended to the upside. Aussie dollar yen's bias, we've got to take it a little bit with a pinch of salt with the yen. It is a long bias on that one, but that's mainly because of obviously the yen interest rates and everything. So I'm looking more for shorts on everything against the yen at the moment. So that looks good to me as well. The problem we've got, and this is why I was looking at the news over the weekend, was about this coal. There's Australia just gone past. There. Was about this coal export from Australia to China starting up again. So if that does start, oh, there we go. China's some news coming in. Consider deficit ratio. Mulling, da, da, da. No. So yeah, if China does start to accept exports of coal from Australia again, then we're basically going to see the Aussies potentially power up a little bit. So we've got to be a little bit careful with Aussie shorts at the moment, because there is potential news that might drive that higher. But obviously you can see on this one, we're just completing this massive propulsion gap. So this is basically where that move started from. We've tested it once, put in a new higher low. Now we're putting in a higher high. So the market structure is basically pushed all the way back up to there and completed the propulsion gap. The question is whether or not we're going to get that pushed down. So very nicely extended on the hourly. Looks like a good little short to me. So M5, wait for the next reversal alert for a short on that one. M15 as well, pretty much the same place, I think. 91,350. Yeah, 91,390. So M5, you're going to get a tighter entry, but looks good for a short, nicely extended. We're coming up into an area where we initially started to move. So I suspect we'll get some kind of reaction there. But yeah, that one looks nice. Aussie dollar, US dollar. Again, bias on this one. Obviously, we are looking at sells based on US dollar strength. All the fundamentals now are, we've got retail offside as well at the moment on this. So when that retail sentiment shifts back the other way, this is going to become an even stronger sell. So problem we've got is this US dollar. Uncharacteristically weak off the back of all the fundamental positive news. What the hell is going on? Like everything, I suspect this is a huge liquidity grab. They're just getting everybody in long. And the trouble with this sort of play is you always having in the back of your mind, have I misread the fundamentals? Is inflation now not doing what it used to do? Is interest rates not doing what unemployment figures are all facts fantastic? Is this now not good for a currency? So this move, I'm used to seeing news push in the opposite direction to what's expected at non-farm and other news events. That's usually a given. This extent, I mean, this move that we got off of non-farm on Friday, and the continuation of it is over 2.5 ADR. I would have expected on Friday either a bigger, stronger move and then some kind of retracement, which is what we normally get, a return to origin on them, or not. When you see this sort of movement, this typically is when we see that sort of move going in, like with the Swiss franc. Yeah, so when you get the fundamental shifts, I'm looking that as well. That's probably not the best example. There. So this is a fundamental shift where you get something happens and then you accumulate and drop from there. So this is the Swiss franc saying we've decided to increase our interest rates by 0.5%, which we've never done before. That is the sort of thing you see when there's a fundamental shift which changes the direction of a currency. And that's what we're kind of seeing with all these USs at the moment. It's pushed up really hard. But on fake news, that's what normally happens. What we've actually got is a push, a continuation push. And this morning we're pushing more, which doesn't make sense. So today I need to see this US dollar strengthen up, and I need to have confirmation that these are liquidity runs and a break back down below to today's low. So today's candlestick obviously is opened here. So what I want to see today is any candlestick that looks like that. It could be a little hammer, it can be a big hammer, whatever, but I want to see a long tail. This is the tail we've just had formed. So now I want the body of the candle to be somewhere down here today. That I'll be absolutely fine with, and will confirm the fact that the bias is correct and we are all right being long on the US dollar because of all the positive news. So be an interesting day today, but that Aussie US, again, really good looking short opportunity. We're nicely extended on the hourly. We're embedded and extended on the hourly. We've got huge propulsion gap targets all the way back down in this in these ranges. And we've just taken out all the liquidity on anybody that's been trading this thing for the last 2 weeks in the downside. So, and obviously everybody, yes, last week as well. Look, if you look at last week's moves, we pushed up into here. Everybody saw that move and they were like, excellent, we haven't made a new high, we'll get in short. They all got liquidated this morning. They didn't get liquidated Friday, but they did today. So a lot of people are taking out long. Short. There's not going to be too many players left short on this at the moment. So they're going to run out of people that are willing to sell to them up here. And they're just going to have to bring it back down at some point. So it looks like a really good short opportunity, Aussie US. We just had the reverse alert on M5 and the retest. And we are literally, this is going to be your retest candle right now on M15. So there's your reversal alert. This is the retest candle. So this is about to alert in 3 minutes to go short. So yeah, get in that one if I were you. Looks good. Euro odd. Just quickly see what the DAX is up to. Just sitting at the minute. Euro odd. Again, nice extension on this one to the downside on the hourly. We're just taking out the liquidity down at those lows. Fundamentally, not going anywhere. Take your pick, up or down. COT is long. So there wasn't a lot of change on COT this week. The biases are all pretty much the same as they were before. Let's quickly look at the COT. So anything over 60 is a plus, basically. Anything over 70 is a plus. So we've got really good biases short on the Aussie and the CAD at the moment. We're pretty mixed on the Swiss franc at the moment. Really good long bias on the euro, good long bias on the New Zealand, and a good long bias on the US, and a good short bias there. Obviously, all of this information is from last Tuesday. And so any news that we had last week from there onwards, which is pretty much all of it, is not included in that COT report that was released at the weekend. So anything that's changed because of any positioning that's changed because of this won't be included. But the only thing I can really see is you would have more people piling on the US dollar because we had nothing but positive US. So I would suspect this is probably sitting up here somewhere now. So I can't see any, and everybody's short the yen. Look, all the big guys are short the yen. So hence why I'm looking for shorts on the yen at the moment, even though we've got fundamentals which kind of point the other way. This is all about interest rates, and interest rates for the yen have not changed since 2016. So we can't take interest rates into account when talking about the Japanese yen. So yeah, euro odd. There's no bias whatsoever. So that looks like a pretty good long opportunity there. Again, same thing. Extended on RSI. There's no bias. So we should get a pullback. There's your propulsion gap up at ADR. So that would be the initial trade up to there. And from a position trading perspective, this could well go a lot further. So if you look at where we are on the 4-hour chart, we have just broken down through that level there, which we obviously broke previously as well. So we are trending down a little bit on this. We've got this nice support down here at 150 ADR. So if you're position trading this, you'd be in here and then looking to get in again somewhere around here for a push back up. But long term, Lagarde's been very, very bullish on the euro. The fundamentals are all looking good for the euro, but there's no real overall bias on the euro odd at the moment. It is range bound, but we've got the big players on side. So I would say we're looking for a long there. So that looks good. Euro odd. Euro US dollar, again, another opportunity there for a short. All of these US dollars are long. US dollar Swiss is now range bound after the news at the weekend, and we've got sentiment on the wrong side at the moment, which is mainly tipping that one back into a sort of range bound play. But everything US dollar against the US dollar, and then we've got the pound. Sorry, US dollar, euro US dollar is a negative. The pound is a negative. New Zealand is a negative, range bound, and all the USs are positive. So fundamentally everything is going the US's way still at the moment. So looking for levels, euro US dollar, you've got an obvious level here, and you've got that high there as well, which potentially there's liquidity. And this is quite an old level. This is before Christmas. This is the 14th of December. So most people will have cleared the decks before Christmas and gone flat. So I'm not really convinced there's a lot of liquidity up there. There will be limit orders there with people looking to get in short, and there'll be limit orders there as well. So there's liquidity there. There'll be limit orders on the double top there. So that looks good. ADR. So if we do get an ADR hit to the upside this morning on euro US dollar, that would be a good looking short opportunity. But again, this is a lovely propulsion gap. I love big propulsion gaps, like this, especially on the hourly. I'd be very surprised if we don't test that. And I mean, that's what I'm looking for. I'm looking for a new low. So testing that is just kind of the start. But it looks like a good looking short opportunity. But underneath the Asian lows, Asian midline is probably a good place to look. That's going to be your reversal alert on M15. So it's either going to sweep that liquidity or it's not. If it doesn't, you can get in on this. If not, wait for an ADR. So there's liquidity. That's the spike liquidity there, which I don't think there's liquidity on, but there will be limits. So there's going to be orders sitting in this area, basically, is what I'm saying. So if we do get up into this area, that's a really good looking short opportunity. Again, I'm exposed on the US dollar fully at the minute. I can't get any more. And I'm not. No, I'm not. I haven't got any euro on either. I'm overexposed on the New Zealand now because the EA is running on that. So I might look at taking one short on this today. Personally, I've got a lot of exposure on at the moment. So I want to get some... I want to get it at a really good level. So I'm going to look up in this level here. I'm just going to set an alert I'm just going to set an alert just above that level there. Just to let me know when we get there. So I just need to change that alert because it's the wrong... Oh no, I haven't got that on here. Oh, I do. So yeah, I'm going to set an alert there, which is going to tell me to start paying attention to this. If we get an ADR hit, obviously I'll be paying attention to it anyway because the ADR dashboard will alert me to that one. And that lights up. So that's where I'll be looking for shorts. Euro US dollar. But if we don't get there, it could come down. So if you really want to get a little bit more aggressive on it, get in when you get the reversal on M15, and then you've got an option to take a second up there. So they may well entice shorts, liquidity goes, then they'll come up and take all of that at the same time, and then they'll drop it. So we'll see on that one. Pound US dollar, I'm already short. So I've taken a couple of losses on this one overnight. I purposely had my stops above there. I'm using a quarter of an ADR stops at the moment on this account because it's an evaluation. So yeah, just basically waiting on this, see if we can get any downside on it. I'm waiting for the US dollar. So we've had a reversal alert this morning, which is great. So we have got signs of weakness coming in. We've had a structure break. There's our high, there's our low. We've just put in a lower high. See if we can get a lower low. If we can get that, we've got an M pattern reversal. Then it's a case of, are we going to get some US dollar interest? But look at the speed that we're going to be moving at. This is ADR. So to get down into this propulsion gap, if we're going to come down here, we're going to need something like a 150 to 200% ADR move. There's no news today. So I don't really think this is something that's going to play out today. It's probably more likely over the next 2 to 3 days. The next news event we've got coming up on the US dollar is on Thursday. So we're on Monday here, obviously. I know we've got Powell speaking tomorrow. Yes, I mean, Powell could, obviously tomorrow, anything can happen. But yeah, the next scheduled news event is the interest rates. So that's going to be quite telling as to what happens next, isn't it? And I think Powell might give some indications today as to what they're going to do with interest rates. We've had a lot of talking heads last week about interest rates, all hawkish, but we're now looking at 0.25% to 0.5%, not 0.5% all the time, which is what we've had. So, Kenny, I think the US dollar is bearish today. Yeah, I mean, I think the US dollar is. Well, no, I mean, you think it's bearish today. Well, I mean, right, you kind of state the fact, aren't you? Right now, yes, it is bearish because it's gone up. Pound US dollar's gone up, so the US dollar's bearish. Overall, though, fundamentally, it's not. So, and this is the timing thing, isn't it? Doesn't matter. I'm 99.999 recurring percent sure I'm 100% right on it coming down. I can't time it. Yeah, and this is the whole thing you get in the Telegram groups, isn't it? Everyone goes, "Hey, look at this amazing trade I just took." Well, yeah, you didn't use a stop loss on it, and it's been running for 6.5 months, and now it's in profit, and you're saying you're amazing. It's the timing. Everybody can get it right because the market's going to go up and it's going to go down. It's timing your entries, which is the difficult part. So today, like I said earlier, we could have a bullish day today on this, and it have another update and possibly another 2 updates because this move. And the fact that we haven't retraced any of it is unusual when you've got something that's had such positive fundamentals. Normally, this is what we see in a fundamental shift to the other direction. And all we've had is negative PMI figures. Everything else is positive. So the only thing that I think could be going wrong with the US dollar is the fact the market doesn't like this 0.25% increase that they were talking about last week instead of a 0.5%. But a 0.25% increase is a 0.25% increase. It still makes the US dollar more attractive to investment, which means it will power the US. The soft landing is getting softer. The recession is looking less aggressive. Unemployment is coming down. Everything is a positive for the US. And yet we're getting bearish movement. So, at some point this is going to go. We haven't got the power to time this. The market will move the market when the market wants to. And Powell possibly tomorrow is going to be the catalyst. You know what this is, talking heads are like. He comes out and says 0.5%, boom, US dollar's going through the roof. He comes out and says 0.25%, oh my God. And if he comes out and says something like, in fact, we're looking at 1 to 1.5%, not 0.75, it's going to go mental. If he comes out and says we're looking at maybe 2.25s instead of 3.25s, US dollar's going to tank. This is what drives it and times it. We can't time it. So yeah, it's bearish today at the moment, right now, but if the next 15-minute candle closes like that, we're bullish because we've had a market structure shift. So yeah, time it as you see fit. And it obviously depends on which time frame you're looking at, doesn't it, as to whether you're bullish or bearish. Right now, I'm massively bearish on pound US dollar because we've got 4 wicks to the upside. This market is not going up anymore. There's no buyers left in this market. For the last 3 hours, there's been nothing but sellers. To me, that's massively, massively bullish US dollar. Right now for 3 hours, but one candlestick closing like that, and I agree with you. Perspective, isn't it? There's never any right or wrong in this. You get in, you get out. So yeah, I'm pretty short on that pound US dollar at the moment. But we'll see. Just quickly checking on the DAX. No movement yet. So we're not really gone anywhere at all so far today. Just sitting in $100. drawdown, $80 drawdown, and $70 drawdown. Nothing at the minute. Right, so that's pound US dollar. So I really like that. Obviously, you know, this is embedded because of unemployment last Friday. It's coming down at some point. It's just whether or not they're going to do it today, and that's the big unknown, the big question at the moment. So we'll wait and see with that one. New Zealand dollar, US dollar, very much in the same position. Fundamentals on New Zealand, US are range bound because we've got a strong New Zealand at the moment. It's more bearish than bullish. There's no COT positioning to give us any advantage there. The New Zealand dollar is more bullish. US dollar is bullish. So you got a bullish currency against a bullish currency, gives you no bias long or short. So we are neutral. Intraday sentiment on that one, New Zealand dollar, US dollar, we've got the vast majority of the market is short on it. Again, bullish. So, you know, today, at the moment, right now, it's in the market's interest to go long on this from a sentiment perspective because everybody's shorting everything against the US dollar. So everybody's liquidity is above, isn't it? So it does make sense for the market to push higher today. And then they'll take everybody out and everyone will go, oh, Christ, we've got this wrong. They'll all go long and that's when they'll drop it. And that's when probably Powell will talk tomorrow afternoon. So New Zealand dollar, US dollar, still like it's short up here. We're at another, again, good level of liquidity. So we've got this propulsion move from this range there. It did break down previously, but this is still a good propulsion gap that we're in right now. So I like this short from here. Again, you know, high, low, lower high, looking for a lower low to come in. Really nicely extended on the hourly. We've got a nice M pattern there. Is that divergence as well? It's a bit difficult to tell if there's divergence there or not, isn't it, really? I mean, it's definitely going to be bearish divergence, but I think that's marginal on it. But yeah, so a good level on that one as well. And again, it's all down to this US dollar. So there's opportunities everywhere at the moment for the US dollar, but we're just waiting and waiting and waiting. So again, US dollar CAD. Oh my God, that was a lovely one, wasn't it? This is what I tried to trade on Friday with the EA, and I put the times in wrong. I would have been on that, but I wasn't. So this one obviously is coming down. We are hugely extended on the hourly. 4 hourly, we're just about to get an extension on as well. We've got a liquidity pool coming up potentially down here. Oops. So there's liquidity sitting here potentially. Again, with this, with these levels before Christmas, obviously this is going back to November, and that's back to the beginning of December. So the market and retail, everybody exits positions usually over the Christmas period to get themselves flat. So whether or not there's still orders sitting here, I doubt. I doubt there's an awful lot of any stops there, but there will be limits set there as a double bottom. Yeah, so those limit orders actually looks like it might have actually triggered them, have we? Oh yeah, we have. Okay, so that basically that candlestick for the last hour is limit orders triggering. So they've already triggered the limits. So it's just a case of seeing whether or not we get a little flush out the bottom and push back up again and signs of rejection. So you can drop down on this one. We're nicely extended and embedded on the hourly. Again, drop down. M15 reverse alert is just retesting at the moment. M5 you've had. You're probably going to get a reverse alert to the downside on that one. Hourly might be a good one to take. Yeah, hourly would be a good reverse alert to take. You're buying straight into a propulsion gap, but I mean, that's where we're looking to go. So, yeah, next reverse alert, long, basically. If you're going to position trade it, you've got a couple of levels coming up, which is down here. So 175 ADR is the low of November. We've got that low there, and obviously where we are now. So we're playing the double bottom bounce here on an RSI extension on the hourly. Again, there's the RSI extension on the 4, which is, you know, this could well be it as well. But failing that, you've got at ADR. So roughly half an ADR away, you've got one, and then 3/4 of an ADR further on from that, you've got another one. So it's 1.25 ADR move in total. 157, yeah, down to there. So again, from a position trading perspective, assuming we're going to get this US dollar strength, and this has not been completely misread, and the market is actually not bullish on the US for some reason, those are your entries. So just get the reversal alert indicator or EA on and just take an initial reversal here. Half an ADR apart, we'll get you into a second. Morning, woke man. So that's US dollar CAD. US dollar Swiss, again, massively extended to the downside. US dollar CAD is buy, US dollar Swiss is now range bound, mainly because sentiment is on the wrong side. So US dollar Swiss, we've got everybody long, which you'd expect. You know, everybody's long. Everybody's long US dollar, short something against the US dollar at the moment, which is, you know, logical. That's what we should be. So we're just waiting basically for that, as much of that liquidity to get grabbed as possible before they actually start moving the other way. So US dollar Swiss, we've got a low down here. So if we get down to there today, which is well within an ADR, that's a nice looking double bottom bounce. That our hourly extension, we're below 20 now, so that is, you know, very nicely extended on the US dollar Swiss. So we're going to get alerts on that one. How long we got? 10 minutes. So that will be popping up here as a very, very, very strong buy, US dollar Swiss. Down at that level. So if we can get any further than that, obviously we're going to get even more extended. You know, going back to the boot camp, the more extended that elastic band gets, the faster that thing's going to ping back when it snaps. And we need a catalyst for that. And the catalyst coming up is Powell tomorrow afternoon at 2 p.m. So we could just have a big, strong move today on these USs, and then Powell could obviously do what he likes tomorrow. But I suspect if this US dollar is coming down and we don't get any positive movement on the US dollar tomorrow, Powell is going to want to talk that up. So we'll see. How's the trading been this morning? Haven't really been doing much this morning. Just testing out the EA and losing $1,000, basically. You're drinking a Stella after taking a 1% long. Very good. Right, so that's the RSI extensions. You're going to get more extensions coming up on that in 10 minutes as well. So we will get some more extensions. DAX isn't doing anything this morning, just a flip-flop, a Philippe flop. So yeah, nothing to look at there, really. Right. So just looking at the overall bias, I'm going to quickly whiz through the indices and oil as well. But those are your buys and sells at the moment. So I'm on quite a few of these already, obviously. We're just waiting for movement on them. So there's a few there to look at. So let's whiz through those. Aussie dollar, New Zealand dollar. I've already got my short on that one. So we've had this push, accumulation, push. We've had a 3-day accumulation, which has been kind of a little bit of a flag, but not going anywhere at the moment. We've got the strong New Zealand dollar, and we've had a strong Aussie dollar off the back of the China news, which has obviously just caused complete sideways movement. So I'm short on that in a minute. I've got my TP down here. This was an ADR reversal that I took on Wednesday last week up here. So this was above an ADR move. So I shorted that. Looking to target back down to this high and this propulsion gap. We just haven't got there yet. So I'm still short Aussie New Zealand. That is a sell. at the moment. Fundamentals are all on our side. COT is on our side. Retail's not really interested in it at the moment, but fundamentally, that's a good looking short opportunity. Aussie dollar, US dollar, which we know about, massively extended to the upside. Really good looking short. That one and the euro, US dollar, I really like. I'm exposed already on the Aussie, but that's a hell of a move. So I would expect some kind of movement. If you look at the inverse of it here, look, and what happened after that, we did have another push down. And that's what I'm saying. What we might get with this US dollar is that, and then they'll reverse it on the news later on in the week. So, it may not go today, but certainly coming back to, test the propulsion gap. Yeah. And in the inverse of that, we'll be looking for a test down here. Certainly think that's on the cards at the moment. We've got Swiss yen and Euro yen as buys. So I'm not, again, with anything to do with the yen, anything to do with fundamentals with interest rates, you can kind of take out of the equation. So if you take 2 off of that, that becomes a +3, which is a range. If you take 2 off of that, that becomes a +5, which is still a buy. But the buy is there because the other fundamentals are on your side. We've got COT on our side with Euro yen as well. But I strongly am swaying towards shorts on the yens. So fundamentals on the yen is very difficult to take into account a lot of the time because of the interest rate divergence, which obviously doesn't mean anything with the yen because they never move. So looking at those, was it Swiss or the CAD? It was a Swiss, wasn't it? So looking at the Swiss yen, yeah, I like it short at the moment. You've got this high here, which I think we've got a good potential to drop out of. The worrying thing is obviously we have only got halfway up that propulsion gap, so we may come and completely fill that and go back to origin on it. Again, depends whether or not we get any intervention from the yen. So we got this big strong move where they've been buying this up, and we're running into resistance here. So we're basically stuck in a range. Whichever way we break out of this is the way we're probably going to go for the next few days. So I'd be more inclined in taking RSI extensions and ADR extensions to the upside on anything yen at the moment and focusing on those. Same with the euro yen. Again, it's exactly the same move. Push up, accumulation, got high there. So it could come off of there. They're very, very difficult to trade at the moment, the yens. But likelihood is intervention, and intervention means shorts. We've got Euro New Zealand and Pound New Zealand as shorts. I'm short on the Pound New Zealand at the minute, which is nicely in profit at the moment. Again, very, very choppy mess. I'm looking to target the lows. That's where I'm getting out on this one. It's not a massive profit, but need to get some money back from that cock up this morning with the EA. So yeah, nice moves to the downside on that one expected. I get the feeling we're going to break this low. And the problem we've got is when we break this low, there's nothing. There's nowhere to go. So these are the previous lows. You've got to ignore this because that's Liz Truss and her stupid budget. So real support on this is here. Oops. So that's really where I would look at support at 150 to 175 ADR today, which we're not going to get to today. But that's where I would be thinking, right, we may need to get out if we're short and then look for a pullback to get in short again on it. So ignore this spike. This is just, the craziness of that budget. So we're either going to do one or two things on this one. Market is short, sentiment is short, everything's fundamentals are short. So, we are just gradually grinding down here. It's a massively wicky pair, this, but we are going down. So I'm getting out down here, assuming that we're going to get some kind of pullback, whether it be a nice big pullback or whether it be a choppy pullback into here somewhere. And then a move down, but I want to get out and bank some profit, and then obviously got the opportunity to get back in. The EA is running on this one for me on Pound New Zealand, so market reversal alerts EA is running. So this will just keep getting me in short anyway. So if I get out, it's just going to keep getting me back in again, which is fine because I just want to start building and continuously building short positions on this one. And then the Euro New Zealand is very much the same. So really only want to take one or the other of these. It's already gone, missed it. So the Euro New Zealand trade was up there, which is kind of, I think I probably showed this one last week. I think probably this is where I was looking to get in, but we didn't get there. Obviously, non-farm payroll tanked it on Friday. So yeah, broken to the downside. So we're looking somewhere in here, probably there, for a new leg down on Euro New Zealand, if it can get there. If not, probably going to break and just drop from there. So that looks like a good short as well. But there's a better one in Euro US dollar. Pound US dollar short. I'm obviously short on this one already. Waiting, still waiting. So they've just taken liquidity at the high. So we've just taken out the Asian highs and swept that. So we've got a new high put in. So you've got a new reversal alert potential there. Another short. We're certainly not flying, are we? The US dollar is not weak. We can see that in the DAX this morning. You know, there's no weakness in the US market at the minute. So I kind of like this when this goes. I guess get the feeling we're just going to get one of these free falls at some point. But we really need something to happen. We've got nothing to move it today. So difficult. But yeah, pound US dollar is a short based on obviously US dollar strength. Hopefully we're not going to come up and try and retest this area. I mean, when this propulsion move started in here, they added lots into this position to keep the movement to the downside. So all we're doing at the moment is picking liquidity off, and it's, we thought it would be that level. Then we said, well, that's probably the level. And then we went, well, obviously they're coming up here. There is potentially liquidity sitting up there, but again, it's pre-Christmas. Everybody you would expect to get flat over the Christmas period. So I don't think there's a lot up there. There will be limit orders probably sitting in this area somewhere, but you can't really pick a spot, can you? So yeah, if it pushes, and I'll have to take a little bit more loss on that position there. But the other two positions I've got on nicely spaced, so I'm looking for that to break the lows. I've got a TP down here on one position. No, I haven't. Did I put a TP on any of these? No, I didn't. What I might do. I'll take one off there. I mean, this is a couple of day move, so I'll look to take one off above there in the middle of that propulsion gap. But other than that, yeah, I'm still looking for shorts, pound US dollar. No reason why it shouldn't. New Zealand dollar CAD, New Zealand dollar Swiss, and New Zealand dollar yen, all buys. So there's those RSIs now. US dollar Swiss and New Zealand dollar yen. Sorry, no, that's just New Zealand dollar yen. Let's hit RSI extension. Let's start off with that one then. So yeah, RSI extension on the New Zealand dollar yen, so which was already extended anyway. So yeah, like it short. The trouble is New Zealand is along at the moment. It's very strong at the moment. That area there obviously is potentially where we've got some liquidity, which is just after Christmas. Anything after Christmas, you've got people positioned. Yeah, so people like me who are getting into positions and holding them and trying to get moves started, we're still in positions, and there'll still be stops in place for these. If you look at the 4-hour chart, where that is on the 4-hour chart, is that move there after Christmas. So anybody that's shorted that on a swing trade is looking high, low, lower high, lower low, keeping that as a lower high, having a lower high put in for a new lower low. So their liquidity is going to be there. So whether they're in profit or not, that's where they will want to get out, because if it gets there, they're invalidated. Their idea is invalidated, isn't it? We've actually put in a higher market structure. So there will be liquidity there. It's after Christmas. Whether or not they've got enough buyers in place to come up and grab that, I don't know. But we'll see. But I like it short. Yeah, I like it short because it's a yen pair. Although it's a buy fundamentally, I just don't think we're going to get that that weakness of the yen now. Now we've had all this intervention, the yen is going to be powering up. So I'm looking for shorts against everything yen. So this isn't actually the best potential short in the world, is it? Because it's a strong New Zealand against a potentially strong yen. But shorter than longer. If the yen does power up, when it powers up, when we get intervention, it's always going to smash everything to pieces. So always going to be coming down. The other New Zealands, we've got the CAD and the Swiss. And New Zealand's US dollar is obviously the other way. So New Zealand CAD, again, buys on both of these. Good cop, good sentiment, mixed fundamentals, but at the moment, everything's a long. So I'm long New Zealand dollar CAD at the moment. I've got my TP sitting up at the highs up here. So looking to get out there on that one. And I will keep getting in long on it. Every time it reverses and pushes, I'll be getting long in on that one. So like that. That was the trade last week. I got in on this one last week. Obviously, you were in here last week. So got in on the reversal alert there. Didn't take my profit. I was in $700 odd profit up there and didn't take it. And I said, we might well double top this. And we did. So I put a trailer on it and got out. Then I took another long. Unfortunately, got stopped out on that one. And then took another long as we broke back above. Next reversal alert. And then we're obviously in this trade at the moment. So I'm going to take profit there this time. But I'm looking for that to break out. So if we do get up to there, I'll take profit and then I'll get in again on a retracement. But we have got this propulsion gap, which is slightly worrying, that we might come back down and try to retest. But this held up nicely this morning. It wasn't really a propulsion gap because the accumulation was actually higher than it because we gapped down. But so like that, New Zealand dollar CAD and New Zealand dollar Swiss. That's obviously gone as well. So look for retracements. So as we pull back into this high, potential you've got to bounce from there or pulling back all the way back down into here. So you've got a low, high, a lower, higher low. Then we were looking for a higher high. But we could just come back and bounce from there, which is hopeful. That's what I'd like to happen. So New Zealand dollar Swiss, that looks like a good looking opportunity for longs. Coming down nicely this morning, so opportunities to get in. Reversal alert on this one, interestingly, will also be a breakout. So that's good. Others we've got sentiment-wise, etc. We've got the US dollar CAD and the US dollar yen. So US dollar yen buy, kind of ignore that one. But the US dollar CAD, really like that at the moment as well. Massively extended to the downside, holding up quite nicely down at this low. We just looked at this one, didn't we? Because it's a RSI extension and embedded as well. So that's nicely extended down there. Really like that one. It's a beautiful limit order bounce. So yeah, that's good. I can't really take that one. Something already exposed on the US dollar CAD. CAD I'm hedged on. I've got one US dollar. So I'm saving this other exposure on the US dollar for the Euro US dollar. That's what I really want to get on. So as I say, if we can push up into ADR today, it's not got far to go. It's not unachievable by any shot, is it? 42 pips. It's half an ADR, less than half an ADR. If we can get there, that's really where I'm interested. So we'll be looking at getting onto shorts there. DAX is just flip-flopping at the minute. We're not going anywhere. Completely sideways. So market structure-wise, we're putting in higher highs. Higher lows. Double topped there. So we're forming basically a little wedge at the minute. So if that wedge breaks to the downside, we'll probably get a flush out of these lows, which would be nice. If it doesn't, We could be looking at a rotation day today. We will see. Anybody got any other pairs they want to have a look at all? I'm going to look at the indices and oil. So oil doing very nicely. I've got one position at TP here on oil. I've got 3 on at the moment. So looking to get out below that high, below that low rather. Here, just in case that acts as a resistance. That is also ADR. So obviously we'll be very tired by the time we're up there. So going to get out of one position up there, but you know, oil, that's the next high to aim for. And then skyward really from there. So we're looking to target that 107 a barrel, which is, you know, up here, miles away. That's a 6-7 month move. But if it's going to start this year, that's last year's low. So we don't want to invalidate last year's low. So low, high, lower high, etc., etc. Higher low rather. Higher low and lower high is really easy to get confused on. I know what I mean. This is why I draw everything out when I'm talking, because that makes more sense a lot of the time than what I actually say. How do you pick the entries based on reversal and ADR extension? Sometimes you take entries on M5, sometimes on H1 reversal. So with an ADR, I only ever use M5. So when I get ADR alerts, like New Zealand dollar Swiss, I would be looking down at M5 time frame, and I would be taking that reversal alert or retest, up to you. Personally, I find the retests are less reliable on ADRs, because with ADR, to get an ADR extension, a lot of the time you've had a very strong concentrated move. So you'll also get an RSI extension on the time frame as well. But what I will usually do is just immediately take that one, because when we've gone so parabolic, when it starts to drop, the theory is that start of a drop is where the money runs out for the buyers. So the buyers are looking to buy. They want to buy more, but there's no more sellers left, because everybody's been, shorted, stopped out, 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 given up. I'm not going short on this anymore because I've been absolutely killed. So the buyers have got nobody left to sell to them. So they can't go any further. And this is why ADR works, because there's only so much you can pump into the market before people are going, I'm not getting interested in that. If you get into a fight in a boxing ring and you lose 7 rounds with someone, they're better fighter than you. So suddenly, yeah, all right, mate, you're better. And they give up. And it's exactly the same principle in the markets. So when you get that reversal alert, quite often you'll find it will just go from there. So I just take the M5 reversal alerts. And if it continues to push, so if we got here, we put in that double top, and then we pull back and it pushed and it pushed and it pushed, this support rectangle is just going to get dragged behind price, and it'll alert higher up, won't it? So, this is why, if it pushed like this and we got the reverse alert there, then I'll take it there. You just take it when the market is reversing. This is a sign of weakness or a sign of reversal. With M5, I mostly get stopped out. If you're using a stop, yeah, don't forget M5, you're going to get stopped out all the time on M5. You're trading chop. I don't use stops with ADR, do I? A position trade. This is the Aussie New Zealand, yeah, is an ADR reversal. This trade is an ADR reversal from here. So this is an ADR move. I got in on a reversal alert up here somewhere. It's probably, I don't know where it was. Obviously it's there. on a reversal alert there somewhere. There's no stop. Well, there is a stop, but it's 2 ADR away. So yeah, M5, you're trading chop. You're literally trading chop. So yeah, of course you're going to get stopped out. That's what the market. That's the whole purpose of the market, is to hunt liquidity. As soon as you go short on or long on a short time frame and you put a stop in the market, it will come and hunt it. It'll grab that liquidity. Yeah, everybody goes long, puts their stop under there, comes down, almost touches it, goes long. Everyone goes, oh, I'm going to put my stop under there. Comes back down again, puts in a double bottom. Everybody goes long. They go, oh, put my stop under there. You've now got 3 batches of traders going in one direction. Every single one of them, because it's very close to the same level, has got their liquidity sitting there. What do? Grab that liquidity and run for the hills. You don't know which reversal alert is going to work on M5 because you are literally trading algorithmic chop, which is why very few people make money on M5 using a stop loss, because it's too hard, it's too choppy. Look at the DAX. Yeah. Everybody that's longed it so far today, it's all there, everything. This guy longed it, this guy longed it, this guy longed it. They all put their stop under there. There's a load of money sitting there. And there's a load of other people sitting there going, I predict we're going to come back down and hit that, and we're going to touch the double bottom, and then we're going to go. So they've all got limit orders sitting there. But this is all algorithmic. This is just stuff going on. This is the move so far today. That's the cash balance move today. Yeah. At the moment, we're not going anywhere. Look. Everybody sees what all these people that took this short here. Yeah, we saw a big move down. We saw a push up to a 50% retracement on the fib or whatever you want to do. You saw a massive wick. Everybody went short. Everybody's stop was positioned here. They came up. They took all that liquidity and dropped back down again. Now everybody's short here. There's liquidity there. There's liquidity there. Yeah. On the 5-minute time frame, the algorithm's job is to go and take that money, accumulate. If you watch the Bootcamp, the very first video in the Bootcamp is about how the banks operate. They accumulate money and then they move the money in the direction that they have a bias on. So if I've grabbed tons and tons of buys and sells and buys and sells and buys and sells, and I look at my book and go, I'm on average 1,200 contracts long after grabbing all of this money, it's in my interest to do that. So we'll execute some orders to drive the market up. But all this here is nothing to do with direction whatsoever. So you will get killed on M5 if you use a stop loss. Because the whole purpose of the M5 time frame is to grab that money. If you're going to trade M5, you need to be in and out fast. Candlestick, out, done. Or, you know, the opening range, the whole purpose behind this opening range breakout strategy is to get the fast opening range breaks. The strategy doesn't work on days where it doesn't move. The only way you make money in the markets is if the market moves. If the market doesn't move, you can't make money unless you are trading super tight, super small time frames, i.e. you're getting in and you're grabbing 5 or 10 pips with very, very high risk. And there's lots of traders out there that do that. You know, they risk 100 or 50 pounder a tick. And there's nothing wrong with that. It's a really good strategy. If you can mentally hack it, it's brilliant. Make a lot of money. But they're not trading anything but that looks like it might go again. There's no, you know, there's it's not luck involved, but it's hoping that the algorithmic move that caused that has more to do. That's really all you're doing, isn't it, on that sort of time frame? But if you want to take it on another time frame, you know, if you want to take ADR reversals on the 15, do that. Obviously, you're going to get a slightly later entry. But the whole point behind the ADR is it either works, and it's same as the opening range breakout. The ADR reversal either works, you get that quarter to a half an ADR move back down, or it doesn't. And the whole premise of the ADR hit is the move that caused it has a profit take. The profit take tends to come somewhere between a third to a half of that move. You know, that's where the fib traders all jump in, which is why they tend to stop there, because there's a lot of people going long there. It's all just mechanics but you can't, again, you can't time it. So if you're trying to time it and put a stop in the market, that's where you get killed. You're better off getting in and thinking, right, we've had a massive ADR move, and the reason I took this short is because the sentiment and the fundamentals are on my side. Aussie is weaker than the New Zealand dollar at the moment. Fundamentally, sentimentally, hot positioning, big players, everything is pointing to the fact that this should come down. So I'll go short on at a point where I think it's likely they're going to run out of steam. But I'm not going to go like that, because if they do that and then that, I lose. I'm right. But you've got to cut it somewhere. So, there's no right or wrong answer, really. Hourly, I don't take ADR reversals on hourly. I take RSI extensions on hourly. So that would have been an RSI short on the hourly time frame. It happened to be an ADR. And you'll find, if you get an ADR hit to the upside, yeah, like that, it's going to be extended on the RSI as well. So you could take either or. But anything going to on the hourly time frame, again, I'm not going to put my money there for them to come and grab it. When do you use stops? Well, I don't use stops. Position trading, I don't use stops at all. I get out at points when my account says this is getting a bit too hot. I use stops if I'm scalping, always. And on prop, I use stops because I don't want to risk more than 0.5% on a trade. But I don't risk 0.5% like that. I risk 0.5% like that. Couple of ADR moves. So if I'm getting into something, yeah, if you go back, and the reason behind this is if you go back and look on your charts and go back to the 4-hour time frame, for example, and look at an RSI extension. I mean, there's no good ones on here because they all worked straight away this time, but there. So there's one, an RSI short. The reason I don't have a stop above the high and I use a couple of ADR is because if you look back, when an RSI extension fails and it has a new high put in, it rarely moves more than an ADR to 2 ADR against you. Yeah. So this was an RSI short on the 4-hour. We got divergence there because it made a higher high. Right. But it didn't move anywhere near ADR. ADR is 76. From that high to that high is 47. It's half an ADR. So I could use a 1 ADR stop if you like. But I want to give myself room. So I risk based on 0.5% if it moves 2 ADR. And if it moves 2 ADR against me, I'm wrong, aren't I? So I want to be out. So this is kind of a hybrid strategy of the position trading bootcamp and normal stop loss trading. So it's an in-between. And what it does is it gives me room. So if I'm wrong here, and this is actually a flag, we're going to go up again. We're going to push up into probably here. So I can get in again up here and average up into there. And then hopefully, and it's the same as this, get in again there and get out there on both those positions. But it's the same principle as that. But if it does that, I'm wrong. So I will start to scale out of these positions. So I'll put one on there, and then I might put one on there, and the stop on this one will be up there. If it continues to push up, that one will get stopped out, but I'll still be in one, and I'll still keep scaling in that direction because the fundamentals are telling me I should be. I've got the big market participants on my side and the fundamentals on my side. I need to be short on this. I don't want to be taking longs. What can't I do? And what do I say every single day in here? I can't time the market. I've no idea when the big boys are going to stop this stupid push up to the upside on this fundamentally short pair. So I will just keep getting in until they do. And when they do come back down and retest this, hopefully I'll have 3 to 5 positions short on it. I probably won't because I'll get out of some of it on the way because I'm not stupid and I want it in the bank. Because I might need to use it in case we get squeezed on something. And on this account in particular, if I stop mucking about with the live EA testing, I'll be absolutely fine. Anyway, it's not a fair representation of the trading that because it's all a lot of that is NASDAQ muck-ups and DAX. So that's basically how I use stops at the moment. I'm trying to get a feel for the market, obviously, because it's the second week back. So, morning. Is this still the London session? Bit late this morning. Yes, we're still in the London session, Seymour. Have I checked EU? Yep. So Euro US dollar, I'm looking for a double top at 100 ADR today. We didn't get it. So right. So these are your choices basically with EU right now. So EU is a short. But not a massively strong short. Okay. Only because the reason this is a range bound trade is we've got a strong euro, we've got a strong US dollar from a fundamental perspective. COT is balanced out. Sentiment at the moment is on EU's side, but the fundamentals are more against. So at the minute, what I'm looking for is either that high or that high, which is around about ADR. So I've got an alert set here. If we get here, I'm going to take a short. We may well push up into ADR and into that area and take shorts. I don't know how many limit orders are sitting there. I don't know whether there's liquidity there or not. Those are the places it will be if there is, and these are where the limit orders will be if there is. But either way, when we get up to here, we're going to find some selling price action. That is where I'm looking to target. So testing in that propulsion gap. Again, it's this, look, it's this. This is exactly this move, right? But what we've had this time is that. Instead of that straight away, we've had a push to the highs. So I can only assume they want to either grab liquidity or test that high. But fundamentally, assuming that the US dollar is strong, this should come down. But the euro is also strong. But the thing we've got going for us this week is we haven't got any euro news. We've got only US dollar news. So it's all US dollar talking head, CAD talking head, US dollar inflation, US dollar Michigan. So it's all about the US dollar this week. So, and after last week's fundamentals, you would expect it to power up. But the only fly in the ointment is tomorrow. You know, Powell might come out and say, because we've had such amazing results last week, we're going to go with 0.25%. And then the market will be like worried about them not doing that. Whenever you get any kind of interest rate announcement from the Fed or from anybody, you know, like they say 0.5 is what we are targeting. What the market does is factor in that 0.5, but it cautiously factors in a 0.25, which is not quite as good. If you start to factor in a 0.25, the market will then go, but what if they don't? What if they don't increase? Same as New Zealand dollar. New Zealand, on their last interest rate, didn't increase. Now that tends to slow the influx of money into that currency. So there may be, what we're seeing here is the market being cautious until those inflation figures come out. But when those inflation figures come out, and if those inflation figures are as expected or slightly higher than expected, we should get that, because it means interest rates have definitely got to go by the 0.5 or the 0.25 at least, which will power up the US. So that's what we're waiting for. Again, if you want to time it, don't take any euro US dollar trades today. Yeah, if you're worried about going into drawdown, getting stopped out, don't take any trades today. Yeah, tomorrow afternoon is where you want to look, and on Thursday. Yeah, one of these two is going to move the US dollar this week. We don't know which. Have you still your cable positions on? Yeah. Cable, for those that might be new, is pound US dollar. Seymour's obviously really old. Still trades the cable and the loonie. Like me. Yeah, so that's the target. So if you're long, up in here is where I'd expect to find some sellers. So if they're going to do a multi-day push off the back of that news before they reverse, that's where I would look to target long. If, like me, you've got a short bias at the moment, right or wrong, and you're waiting for some US dollar strength, anywhere in here. But I mean, you know, fundamentally, I'm looking for that. So we will see. So yeah, oil we've covered already. Not far off a TP on that at ADR at the moment. So indices. Let me just get rid of those. Last week, obviously, we had a big run on the DAX. So we've pushed up today. Obviously, we've pushed up a little bit above. So obviously, obvious there's liquidity sitting there and limit orders. So this is a limit order trigger here to fire and get this down today. The DAX is very, very strong. We've done nothing all week last week but push. We had one pause day in the middle, but we had a very, very, very nice move on the DAX all last week. FTSE, very much the same. We broke out and we're moving into new highs. US indices, completely range bound. So we didn't go anywhere on the US indices at all. So I've got some sell stops sitting on the NAS. Just get rid of those. They're from last week. And the US and the S&P. So, very range bound. We broke out on Friday, but obviously this breakout on Friday was caused by the US dollar. So obviously weak US dollar is strong index. So we had obviously big, strong pushes on the US indices. We're pushing up into this propulsion candle. So this is the candle that broke the low. So that is our wide range bar. And that is where we should be looking for short opportunities. So anywhere on these indices this week, potentially we've got shorts in play. So we're just taking out the highs. So we're sitting basically up at range highs on all the indices. So there's a good chance we might get a negative move this afternoon when New York opens. Whether or not they've pushed out of these highs or not this week, today rather, before the session, difficult to tell. But if we're going to stay range bound and have no direction at the moment, then this is kind of where we should be looking for our shorts, isn't it? But opposite on the European indices at the moment. So DAX obviously is very, very strong. Weak, bit weak this morning, and we've got this propulsion move here from Friday. But again, this is all based on unemployment and non-farm. And we don't know whether this move is legit. So, it shouldn't be legit because, there's absolutely nothing to say that we should be getting weak US dollar at the minute. But we will see. So from the DAX and from all the indices perspective, I'll be looking for shorts. We're not out of this bear market yet by any shape or form. And we've got a long way to go with most indices until we come down to pre-COVID levels, which is what has initially been called for. So there's a long way to go. But we are holding very nicely down at support at the minute. There's a lot of people saying, and the other thing that's kind of driving a lot of this, are we out of a bull? There's a few articles I've been reading over the weekend about, we're entering back into a bull market, the bear market's over because they've seen a double bottom bounce. Look at Bitcoin and what happened with Bitcoin. I haven't even got Bitcoin on here. Bitcoin basically is tracking the indices at the moment. Yeah. This thing is stagnant as you like, but everything that I see, come up and on YouTube and everything about all the crypto traders, they're all like buying the hell out of this thing at the moment, expecting this thing to rally. But we're in the first month of the year we're expecting the recession to hit. Yeah, we're not in the recession yet. Everybody in the UK, for example, is somewhere between £1,000 to £5,000 a year worse off. Everybody, because of rising fuel prices, tax, everything, and it's all forecast to continue to go up. So there's no way on earth we are not getting a recession. It's not a question of are we going to get a worldwide recession. The question is, how hard is it going to be? That is not going to help a bull market. So there's a lot of people, trying to buy into this thing at the minute, but this is just running the same as the indices, and everything, it's you just don't buy something that looks like that. It's getting back to pre-breakout levels. I haven't got the pre-breakout levels on this broker, but it's all the same stuff at the minute. It's all bearish, and we need to be really, I think, looking for those shorts until we see signs of, the Fed and everybody else coming out and saying, looks like we're going to start to recover. But they are not doing that at the moment. They're putting interest rates up because we're not anywhere near out of the woods yet. Interest rates in the US are not forecast to drop for another year, which means strength in the US for a year, which means negative in the indices for a year, or worst case scenario, not going anywhere. Either way, I'd rather be looking at that. It's the same as yen. I'd rather be looking at shorts long term than I would longs. I'd like to get my pension fund going back again, because that was trading the S&P 500 long for the last couple of years, and I turned it off here. I didn't put it on in a bear market because it's too volatile, but I'd love to turn that back on, get back to the old days. Say the old days, 2 years ago. Yeah, this is what we're used to every year. Yeah, this is why the stock market makes money every year, because of this. I'm just waiting to get back on. This is not, until we get market structure properly shifting, and to do that, we've got to break that high. I think that's a long, hard slog to get up there, considering we haven't even got back down and retested this level yet. So, but anyway, intraday doesn't matter, does it? Intraday, you do what you like. God, choppy mess today. Cam, I've back tested on M15 RSI extension, taking a 0.8 TP over 6 months. I took 66 trades, but 14 trades moved 3 to 5% negative, making 2% a month profit. Yeah, I guess. Yeah, 2% a month profit on one instrument is amazing. Multiply that by 28. Now you're making 60% a month. You'd be very over leveraged, but yeah. Again, if you're using a negative risk reward ratio, then yeah, you're gonna. The problem with backtesting, if you're backtesting any strategy, you can only backtest that strategy. Yeah, so you can't see what would have happened over all of the instruments you were trading. So, when I look at, this is what I talk about in the bootcamp with the portfolio approach. So the decisions I make on what I have active at the moment will be based on the decisions, based on what's happened to me so far this day, this week, this month. In a back test, all you're literally doing is getting statistics on what would have happened on one instrument with one strategy, assuming that you, as a human being, never looked at it for 6 months. So if you can say to me, I'm going to put an EA on a chart and I'm going to look at it for 6 months, those are the results you would have achieved in the last 6 months. You will look at those, though, and you will close positions out either sooner in drawdown or sooner when they're in profit, because you're a human being. So you can only test a strategy to get a rough idea. But that strategy, unless it's fully implemented, like this one here, this account here, has been running fully automated for over a year without me touching it, with the market reversal alert EA, and it's produced 125% return because I haven't touched it. My account did completely different because I touch it all the time. So backtesting, this is running the H1M5 strategy on the market reversal alert EA. And it's gone into, when the Ukraine war kicked off, it went into 30, 40% drawdown. Still didn't touch it, But you know, that didn't happen in backtesting. In the 2 years or so I backtested, we didn't have a war. So again, any backtesting you do has got nothing to do with what's going to happen moving forward. But it gives you, if you can see an edge, and you know this, the 4-hour RSI, you know, you can't. The 4-hour RSI extension is my bread and butter. Yeah, because you can. It's rare that it doesn't work, and when it doesn't work, the reason it doesn't work is because the fundamentals typically are on your, are against you, or you're in a, you know, look at the euro US dollar last year. If you were longing this, you're nuts. Look at the Aussie New Zealand last year. If you were shorting that, you were nuts. Yeah. So 4-hour RSI extensions on Aussie New Zealand last year, you went long there. You went long there. You're already in it there. You went long there. You went long there. You went long there, there, maybe there, somewhere around there. You went long. You went long there. And you went long there. Now that is where I got squeezed. Why? Not because of the RSI extension, but because the fundamentals shifted to a negative bias there. And I didn't spot it. I knew it was happening, but what I was looking for here was that as a worst case scenario, and I didn't get it. Unfortunately, I got in there, and I didn't get out there. And I wish I had. But if you look at the 4-hour RSI, it's, you know, it works beautifully here on paper, but you've got to have something else to tell you that you need a direction. Yeah, the moving averages are a great moving average, these 72 and 24, until they're not. And that RSI extension, you're stuffed, you're dead, you're still dead. But there's no strong bias on the euro US dollar at the moment. So you've got to take other things into account. And again, the strategy tester will not take anything else into account. If you went into the strategy tester and said, go short every time we're below the 72 and the RSI H4 is extended above, you'll get a very, very good result. But here, you'll get chopped to death. You need to get out of those trades. Just had some alerts go off. I think I just closed some trades. Yeah, just got out the euro pound. There you go. So that's just banked another $100. Completely unattended. It just, all it does, it just sits there and it banks either $100 or $200 a day, or it doesn't do anything because the market hasn't moved enough. But the strategy that is running is H1M5. So, you know, look at it. It's H1 long, 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 long. Yeah. So get in again, out. Get in and get out. Get in, get out. Probably not. Probably not. Get in, out. Yeah, I'm in now. I'm out. Yeah, H1. So I'm looking for H1 RSI extension. Dropping down to M5. Getting in on the 5-minute reversal alert. So looking at that trade there was an H1 extension from here. So you would have had a 5-minute reversal alert in there at some point on the lower time frame, which got invalidated because it pushed back down. So you would have got into a second position somewhere down here, if depending on obviously if you had your distance set. So let's say we got into one there. What's the ADR? 47 for half an ADR. Yeah, so you wouldn't have got into a second on it. That would have been your position, and you're either in or out now in profit, aren't you? So, but if you let an EA do it for you and don't touch it, you'll be fine as long as you are. And this is why, you know, look at the EA I've got set up here. Not this account, rather. Sorry, not that account, this account. Pound New Zealand, I've got it set up to take short orders. New Zealand CAD, it's set up to take long orders. Aussie New Zealand, it's taking short orders. Pound US, it's taking short orders. Aussie CAD, it's taking short orders. So this will just keep getting me in line with fundamentals. When we have an RSI extension or a condition met that I want to go in one way. Why not make a dashboard for moving averages? Because I think they're useless. And the fact there's about 6,000 out there. You go, there's this thing, Google thing, and if you go to it and ask it a question, it gives you answers. If you go into Google, right, don't tell anybody else this, right? Go into Google and type in moving average dashboard, you'll get about 20,000 results. Sorry, I'm sarcastic. But the reason I haven't made one is because there's loads of them out there and I don't know how you'd use it. What's the purpose of a moving average dashboard? Obviously to tell you where the moving averages are, but what do you want to know? Do you want to, I mean, if you think talking about moving average crosses, that is the worst strategy in existence in Forex, the moving average cross, because the move has happened before the moving average has crossed. It's awful. Look at it, right? Go long. What? I missed all of that. And what have I got? I've gone long because the moving averages have crossed. What have you given me? Nuts. I know. I thought you were going to say no, not crosses. I don't know. I don't really need a moving average. I could easily knock up a moving average dashboard, but there's loads out there. Just go and find one. There's free ones out there. My Forex Factory will have one. There'll be some paid ones. There might be some free ones on MQL5. There'll certainly be some paid ones on MQL5. Yeah, I don't know. You're talking about a different strategy. If you want to confirm the small time frame moving averages bias with the higher time frame, but what's that telling you? Yeah, think about what you're saying, right? If you're looking for a dashboard that tells you that the higher time frame moving average, we're above the higher time frame moving average, right? And you want to know on the lower time frame that we're above the moving average as well. Yeah. What's happened is it's going to alert you after the move. Yeah. When price crosses above an indicator that lags by 20 to 50 candles, it means that we've moved up 20 to 50 candles typically. Therefore, the move that you wanted to capture of 20 to 50 candles is expired. So the thing you can use that for is wait for a pullback to get in long. Yeah. Got an ADR on pound yen. Pound US dollar pushing still no. So this is yen weakness. We're seeing at the moment. We've got some yen weakness coming through. All the yens are being pushed down. So that's the reason the market reversal alerts EA has the moving average filter. Yeah. So think about the strategy that you're explaining. This EA does that strategy. So what you do is you set the higher time frame moving average to be true. So you're saying if we are above, in this case, the 72 daily moving average, yeah, I'm interested in going long, right? But what I want to do when I go long, because we're above the moving average, is I want to get in on a pullback. So how can you measure a pullback? Using relative strength index. So if we are above the 72 moving average and we are below whatever level on the RSI on the hourly, for example, take a reversal alert long. That is exactly the trend pullback strategy. Below the moving average, RSI extended to the upside, enter short. The EA does all of this. You don't need an alert dashboard, but I mean, obviously, that's the trend pullback strategy. So right here, we're looking at the 4-hour chart. So we're saying we're below the daily moving average. RSI on the 4-hour is extended to the upside, stretched, expecting either a continuation move or a profit take. So get me in on M15 time frame on the reversal. Yeah, so it's a great strategy. But the EA does all of that. That's why I haven't built a dashboard, because I don't really care about them. Moving average. The only thing I'm interested in is the dailies, 72 and 24. But you could use any time, any moving average around about there, and obviously any time frames. You could use an H4 RSI, an H4 moving average, an hourly RSI extension, and a 5-minute reverse alert entry. As long as you've got multiple time frames involved that are all agreeing with each other, that's what it's all about, isn't it? And then make sure you've got the fundamentals on your side. So only trade the ones that the rest of the market is saying should be going in one direction. You know, if everybody in the world is short on something and it's pushing, it's a pullback on a downward trend, isn't it? All the liquidity's there, which is what the market's going to come and grab. So are just good for dynamic support and resistance or bias? Yeah, so moving averages, people call them dynamic support and resistance, and yeah, it's a term that I've used as well. They are a dynamic support and resistance, but they're more of a directional indicator for historic purposes. Yeah, so you know, look at Aussie New Zealand. Yeah, did the dynamic support work there? No, not at all. It worked there, worked there, worked a little bit there, worked 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 there beautifully, worked there beautifully. Failed miserably. Lost me 15%. But the reason that didn't work is because that has absolutely nothing to do with the fundamental shift in bias on this instrument. And the only time you find out you're wrong is when that happens. It's a lagging indicator, yeah? This line here lags price by 24 days. This line here lags price by 72 days. So this is telling you what's happened 72 days ago. In the last 72 days, the average price was here. I know that. I can see it. It's on my chart. Everybody tries to use moving averages for what they call bounces. Price doesn't bounce off of anything. It bounces off the support and resistance because of a sheer quantity of limit orders that are placed in the market. But it doesn't bounce off of a moving average. It looks like it is, but what it's doing is putting in market structure, highs and lows. Yeah, because this line is measuring historical price, and historically it's been doing market structure. So historically, the line is going to be drawn. This line is drawn after this has all happened. You see it on your chart drawn supporting something, but what's actually happened at this point is this line wasn't in existence. This line can't be drawn. It can only be drawn 72 candles back. Yeah, does that make sense? It's the biggest lagging indicator there is in trading. And it's to show you long term where something has been going. Yeah, I have been driving my car safely on the road for a long time. One day I was driving my car safely and somebody else wasn't. They hit me. Yeah, up until that point, my moving average of safe driving was like that until the guy crashed into the front of me. Yeah, it's historical information. It doesn't make any difference. It doesn't affect future at all. I'm short here, not because we're at the 72. The 72.24 zone is a beautiful place to take shorts from because we know as long as historically it's going to continue to do the same thing as it has done because the fundamentals point that way, we'll be fine. Otherwise, it's not going to bounce here just because it's hit this line I've drawn on my chart. If I change this line to be something different, it will give me a slightly different result. And this is the other thing about moving averages. Everybody uses the 20, 50, 100. You can fine tune those to have a much better hit. Yeah, if you put a 20 on a chart, like on a lower time frame, go down to I don't know, hourly. Let's try the hourly. And put a moving average on it. Moving average. Let's try 20. So if you put 20 EMA on your chart, yeah, it's not very well respected, is it? It missed it completely, missed it completely, missed it completely, missed it completely, missed it completely. But it's going up. Yeah. So what do you do here? It's just utterly useless. Utterly useless. But if you change this to a 50, that wow, 50 is way better in this instance. But which one are you going to use? The 20, the 50, or are you going to use the 100? Like I select it. 100's amazing, but it's useless, useless, useless. Yeah, there is no moving average in existence that works well. They all work well, and they are all useless because it depends which one you use as to what you see historically in the background. So everyone goes, I'm going to use, every time it touches the 100, I'm going to take a long. Yeah, so you're long there. Is it any use whatsoever now? No. Go back in time. Was the 100 any use there? No. Was it any use there? No. It didn't bounce, did it? Didn't bounce there. Did it bounce there? No. Smashed through it. Useless, useless, useless. That one, it worked. There's a lovely hammer there. And what did it do? Bounced off of support. Anything to do with that 100 line I've drawn? Nothing. Nothing at all to do with that 100 line. 100% to do with the fact that the market pushed up into that level again, rejected it, slammed through it, made a propulsion gap where the buyer stepped in and added limit orders to it. Nothing to do with the line on a chart. So you can fine tune this. If I make this 115, look how accurate that is. Oh my God, that's the best moving average in the world. I've just discovered the Holy Grail. Did it? I missed all of that. Missed that, missed that. I got in there and got slammed, got lost. I had a little short there, which stopped me out. Do you see what I mean? Anything historically that lags is just no use whatsoever. And all, I say no use whatsoever. They have uses, obviously, but you can't create a system off of an individual indicator like a moving average or an RSI. On its own, it's not any good. Like this is extended on the RSI. When do you get in short? Do you get in short when it crosses below the 70 level? In which case there you got stopped out, and in which case there you got stopped out, and in which case there you're in. You got stopped out. So you've got stopped out 3 times, and it's not gone anywhere. So is the RSI any use? It's no use at all. New Zealand dollar yen ADR. So the yen is massively weak today. Again, like I said this morning, that's all very often happens when you've got a bank holiday. Yeah, yen either gets pumped or dumped. So you need multiple indicators. So this is a condition indicator. Moving average is a condition indicator. So the condition of the market at this present time is an uptrend. The condition of the market at this time is extended to the upside. You need a signal indicator, which is what the market reversal alerts indicator is. That is telling you there's a structure shift happening at a level of extension, but against the trend. Yeah, so there's different indicators are useful as a combination, and that's, I've got a video on the channel about what a strategy is. If you look in the playlists under the strategies section, oh my God, Nirav, my man. There's one called "What is a Strategy" in here somewhere. Oh my God. What a trading system or strategy actually is. Yeah. So it's only a little 12-minute video, but it breaks it down into, this is how many times have you seen people posting in groups charts like that? Yeah. This is over that. That's under that. That's over that. This is pointing down. That's a little bit weak. And therefore, I've got my parabolic SAR, which I'm above. So I'm going to do this. How impossible is that to replicate over and over again? You just can't do it. So you have, and all of these are telling you exactly the same thing. This is telling you the condition. This is telling you the condition. This is telling you the condition. I know what the condition is. I need one thing to tell me a condition. I need one thing to signal me to get in. Overcomplications of strategy is the thing that kills everybody, because you can make, I can make a strategy with 5 indicators. Backtest, I can make something that makes millions. These conditions will never get replicated because there's 5 times 5 times 5 times 5 times 5 times. These have all got to line up in exactly the same way for that condition to get met again in the future. It just doesn't happen. It will happen 70 times in 2 years testing on a 4-hour chart, but those 70 times won't ever happen in the future again. It's just overcomplication. DAX is just having another go at the lows of the range again. Sorry if this is too simple a question, but could you explain what a bias is, how it is dynamic and influences price action? Parabolic SAR. I love parabolic SAR. Well, a bias is, all a bias is which direction you think the market is going to go in. So at the moment, I am bearish Aussie New Zealand. My bias is short. So I'm entering short trades because I think this is going to come down. That's my bias. And there's an unlimited amount of ways that you can create a bias, but most people tend to use what's called a market condition indicator to generate a bias for them. So a moving average. So if price is below the 72 moving average, which is this one here on the daily chart, this is the 4-hour, but this is the daily 72 represented on the 4-hour chart. Let me go on to the daily actually and make it super simple. Yeah, so this is the daily 72 moving average. This is the daily 24. If price is below the daily 72, I will only take short trades. My bias is short because we are below this moving average. It means that price is historically coming down. Yeah. Another condition indicator is an RSI, relative strength index. If relative strength index is extended above the 70, 80, whatever level you want to choose, I will only look to take shorts because the condition of the market is extended, which means it's likely to either pull back or profit take, which means I want to be short. So that's how you generate your bias. Your bias has nothing to do with influencing price action at all. Yeah. Whether my bias is right or wrong has got nothing to do with where price is going. Price is going to go where the market takes price. And I don't know where the market's taking price. If I do, I would be a billionaire and I wouldn't be sitting here talking to you on YouTube. Because if you knew where price was going, you just would make money all the time. That's why the banks make money all the time, because they know where price is going, because they have the power to move the price. Think about if you had a horse race and you earned every horse in the race, you're going to win every time. Yeah, the banks own 10 banks control virtually all movement in the market. So if you dump 100,000 contracts long in the market goes up. You just then sell those 100,000 contracts at a profit. We can't lose. We can't do that. So we have to have a bias, and you have your bias. Your bias can be based on moving average, RSI. It could be based on support and resistance. So you could say, when it gets to a level, whether it be dynamic or what, I'm going to take a short. So when we get back up into this block here, where it went sideways for ages, I'm going to short it in here. So you shorted it and you won. You shorted it and you lost. Yeah, your bias was caused by price getting to a level it's been at before. So all bias is a I reckon I'm up or down. There's only two. There's biases long or short. That's it. But has no influence on price. What I think is it's got nothing to do with it, has it? But fundamental bias, which is what this is based on economics. So this is what the banks and institutions pay attention to. Yeah. So this is the positioning of the banks and institutions, whether they're long or short. And this is how the economic drivers are likely to affect the direction of a currency. So if you've got all the fundamentals, interest rates, inflation, GDP, unemployment, etc., all saying that it's not very good at the moment for something, that will tend to make that currency come down. If you've got all the market participants also saying they think it's coming down because we can see their positioning in the Commitment of Traders report, and you've got all the retail guys who typically get it wrong 80% of the time going the other way, you've got a bias. Now, if that bias is also underneath the 72 moving average and we've got the RSI extended to the upside, yes, please. But whether it's right or wrong has got nothing to do with anything, because if the market, the drivers of the market, the banks want to take this thing higher, and I've said everything points to the fact it's going down, it's going to go where it's going to go. My job as a trader is to manage the risk in the market. So I have a point where I go, I'm wrong, and I get out. Whether I use a hard stop in the market or I don't use a stop in the market and I close my positions is entirely up to you, me, and everybody else. But the bias is really, do I want to be taking longs or shorts? On instruments like the indices, like the DAX here, every day it will do both. So I don't have a bias intraday because it could go either way and both, and it often does. So you just get in and get out, but you use risk management to make sure that when you get in, you risk a certain amount, and when you get out, you try and get out with more than you risk. And that's the same, obviously, in all trading. But that's all biases, and you form it any way, shape you feel, and that's what a system is. All a system is a combination of X number of working parts. So let's say 3 working parts: moving average, relative strength index, and reverse alert indicator. That is a 3-part strategy, right? Trend pullback strategy. I need to be below one of these. This needs to be above the high bit, and I need that thing to ping an alert short. Take a trade. That's a strategy. So my bias is created by that and that. This is the signal indicator, which tells me to enter a position. And the stop goes wherever you fancy it, depending on whether you're holding it down to here or you're holding it down to here. You'll have a stop. If you're going down to here, your stop will be there, tight. If you're going down to here, your stop can be 2 or 3 days of range away, because you're targeting 2, 3, 4, 5 ADR move to the downside, something like that. It's 300. This 70. This moves 76 pips in a day. This is 327 pips. All a bias is just a flip of a coin. I reckon it's going that way. Pound yen. So pound yen's hit ADR this morning. So it's come off of ADR, 5 minute. Just about to get a reverse alert on that. This is a new 5 minute candle, literally just started. So if this candle closes bearish, we've got a reversal alert off of ADR. That's short. Which platform would you recommend for complete beginner? Your platform has got nothing to do with anything. Your software you used to trade with isn't going to help you. Education, learning. If you're new, go to babypips.com and do the course on babypips.com. Start there. Go to where's it gone? Learn Forex. There's a huge course. This will teach you all the basics, and start you in your 3 to 5 year mission of losing money. Rather be upfront. Or you can watch the position trading bootcamp, but I think a lot of it will go over your head, to be honest. On my website, you've got loads of free education, but it's aimed at people that you need a basic understanding of some stuff. A lot of it will probably go over your head, but try it. Just learn stuff. That's all I can say. You learn. It takes a long time to learn stuff. And you never stop learning in this game at all. You will always be learning. I'm learning constantly every day. New stuff's happening. And you just get on with it, basically. So I've not made any money at all on the ORBs this morning. They haven't moved. What a shite session. So we're in a symmetrical triangle at the minute. Potentially. Not very clean, but so we're sort of it's kind of where we are, contracting at the moment. So we're literally waiting for some catalyst. We need one of the market participants to actually dump some volume in. There's no volume in the market at the minute. And again, this is where strategy doesn't help you. Nothing helps you when the market does this. You just can't make money. So you just have to sit there and basically wait. Right, so that's everything I've got covered this morning that I wanted to cover. Just get the euro half off my charts. Gold was the only thing I haven't looked at this morning. Again, obviously gold's just pumped on the US dollar weakness. It's just another US dollar cross. It's coming down a little bit this morning. Yes, we are starting to weaken. We've got a reversal on the 5 minute at the Asian highs. Euro US dollar. So reversal on euro US dollar. Let me just look at my positions. I've got US dollar. So I've only got pound US on. I'm just looking to add some, but I can't add to this until I'm in profit. So I'll leave it there. Anybody got anything else I want to look at before I disappear? I'll be back this afternoon at 2:20 for the New York session. Someone else trying to flog something. TXS, what's that, Chris? I don't know what TXS is. But to answer your question, Sam, sorry, yeah. Which platform would I recommend for a complete beginner? For trading software, there's anything. Really, they've all got indicators on. You're going to get sucked into indicator land regardless, because that's what everything. Half of the Baby Pips course teaches you about moving averages and oscillators, and it's all very much a case of sending you down the path to try and find the holy grail of strategies, which doesn't exist. So any platform will have them on. MT4 is the one that I use, and I recommend purely because it's the oldest. And the fact that it's the oldest means that it has the biggest volume of free and paid indicators out there, which actually have some value. TradingView is a web-based one, loads of indicators and stuff on it, but you need a platform that backtests for you. They all do it. MT4 and MT5 is totally free. Your brokers will give it to you for free. TradingView is free with some ads, or you can pay and have a few extra features and get rid of the ads. But most brokers, if you're going to trade CFDs, which contracts for difference, they will all give you and force you to use MT4 or MT5. So the vast majority of retail uses MT4 and MT5. It's the biggest platform out there. There's lots of other platforms like multi-charts and all sorts of, there's lots of platforms out there. But for simplisticness, MT4 is the easiest and fastest to get up and running with, which is why all the brokers use it, because they don't want you getting bogged down in multi-charts. You're going to need a week to get used to multi-charts and actually go through all the features and functionality on it. And if you want to backtest stuff, this is brilliant. MT4 is awesome for backtesting, and it will give you information very quickly as to whether something works or doesn't work. You can backtest indicators. There's loads of EAs out there you can backtest, and they'll tell you whether things are good or bad. So it's great. MT5 is a little bit buggier in my opinion, and there's less people use it. MT4 looks good. Cam, what year did you become profitable? I don't know. I don't know. A break even, I would imagine it would have been, where are we? 2024. So it would have been 18, 17, 16. 2016. Gosh, that means I've been trading 15 years this year. 2024. Yeah, as Seymour's just said, those two items I just gave you, Sam, babypips.com and my Boocamp. Basically, my Boocamp is the Boocamp basically is me dumping 15 years basically of everything I know into 5 days. So if you did babypips.com course and then came on here, you're going to find I'm going to poo-poo a lot of that crap, because you need to know it, but you need to know why you don't use it, if you see what I mean. So if you do babypips.com, which will take you weeks, it's a massive thing. It teaches you everything you need to know. And 90% of it you don't need to know, but you need to know around about it to understand the industry. You've got to know what leverage is. You've got to know what support and resistance and why people sometimes call it supply and demand. You've got to know what an oscillator is, and you've got to know terminology. It teaches you all of that stuff. But what you will find is you will learn lots. I have done hundreds of courses. I have been trading for many years. I've built hundreds and thousands, probably thousands of strategies, back tested for months on end, and come to a conclusion, which is all covered in the bootcamp, that there are only two things that actually make a difference, and they are the knowledge that the market does that, goes up and down through time, and that you have no control over that or that. So everything you learn in this industry, every course you take, every indicator you use or buy or strategy you buy is trying to solve the problem of when to buy and sell. And it's not a solvable problem because it's out of your control. It's like saying, I want my car to drive me from A to B, but I'm not going to give it a map. It just doesn't work. And the reason it doesn't work is because the reason that's done that is nothing to do with any indicator, strategy, level, or anything. It's because there are more market participants doing that. And it brings it back to the very basics of markets, going back to the Roman times, where you've got a guy selling something here, and you've got a guy wanting to buy something here. And if there's a queue of guys here wanting to buy something, the thing will still go up, because this guy will go, well, I've got 50 people here that want to buy this, so there's obviously demand for it, so I'm going to put my price up. That is what drives the market, and you have no control over it. And there's 10 participants that do it, and they are all fighting each other. So trying to time when the hell these blokes are going to move this thing up and down is just fruitless, pointless. Risk management is the most important thing, not going overboard on risk, and making sure that when you get out of a trade, it's of a larger value than if you'd have lost a trade is helpful. But if you get into every trade with a 2-to-1 risk reward, for example, like it teaches you, that doesn't work. If I get into this trade now with my stop here, and I'm going for a 10-to-1 risk reward, wherever that may be. This is a bad example because that is actually a very easy potential 10-to-1 risk reward. Let me just move another one. Right, so if I'm going to take this double top here, yeah. So my risk is there. If I want to get a 10-to-1 on this, my TP's got to be down here somewhere, right? The probability is it's going to get down to this level and bounce. So using a fixed risk reward doesn't work, because the actual possibility of your reward ever happening, a lot of the time when people take trades, is just not on the cards. The most likely thing to happen today is that we get down to this level in this propulsion gap, which is caused by buying pressure, and it bounces. So therefore, your risk reward today on this trade should be somewhere in the region of 3-to-1. Don't go for a 5-to-1. Yeah. So what you should do is get in, risk an amount of money, and get out at a point that you've made money. Don't worry if it's 1-to-1, 2-to-1, 3-to-1, 5-to-1, 10-to-1, whatever it is to 1. Yeah. You have a risk and you get out when it looks like you need to get out. Yeah. ADR. That's why I created the ADR indicator. We know that price moves has a percentage chance of extending beyond an average daily range on a daily basis. This is statistical fact. It's based on 20 years of historical research. These are the odds of an FX pair extending beyond those levels, and it does regularly. Yeah, we saw 225 ADR days yesterday, multiple days, and it will happen. But it will happen 2% of the year on average. So when you short this and it moves down, and if it gets to that level, get out. There's a 58% chance it's going to bounce. And the chances of you getting from there to there are reducing dramatically. But don't target a specific level because it says in the manual, I need a 3-to-1 risk reward ratio and a 33% strike rate to make money in this market. Yes, that is on paper a fact, but you're never going to get 3-to-1 on every one of your trades. Because the first thing you're going to do as soon as that one drops down to here is you're going to break even, and it's going to pop up, take you out, and then it's going to go to target. That's going to drive you mad. So you need to learn about psychology. It's a never-ending, very, very, very difficult industry. And that's what my course teaches you. Basically, the stuff you learn is going to drive you through the roof with psychological pain. But it's what the market teaches. It's not necessarily what works. For what I've read, MT5 isn't actually an upgrade next version to MT4. I think it was released to fulfill a different purpose, like equities, commodities, etc. Yeah, so MT5 isn't an up. The reason MT5 hasn't taken off is, like you say, the differences between MT4 and MT5. The main difference is the strategy tester. Yeah, this. Oh Christ, that's big. Sorry, I'm on a 42-inch monitor, so I have to shrink that down. So the strategy tester in MT5 is much better, basically. This is running, but it gives you a lot more information. You can use more of your processors. I've got 20 processors. This is obviously, when you're doing optimizations, you can use 20 processes instead of one, which MT4 allows. So the back testing system in this is better and more robust. Apart from that, there's no difference. This is way more buggy. Indicators are more buggy. Visually, it's more buggy because it uses a GPU more than MT4, so this is buggy. And there's about a third of the indicators available on MT5 than there is on MT4. Therefore, if you want to get an indicator for moving average shadow, for example, that I use on MT4, isn't available on MT5. Why? Because the bloke that built it didn't do it on MT5 because he didn't use it. Because everybody uses MT4. With the indicators that I sell, you know, I don't sell thousands of indicators a year or a month or whatever, but the ones I sell and the statistics I get given is that 90% of my indicator sales are on MT4, not MT5, because everybody uses MT4. MT5 is great because you can also trade futures on it. But anybody that trades futures for a living uses NinjaTrader, TradingView, or TraderVate, or Boocamp or Jigsaw. They don't use MT5. So MT5 are trying to crack into the futures market. There's software which is 1,000 times better than this for futures. So, you know, don't get MT5 basically if you're going to trade Forex. Don't need it. Thanks for the feedback and help. Been studying for 2 years. I want to get to the point where I am comfortable to trade and have a profitable strategy. You've been trading for 2 years, studying for 2 years. We'll go and watch the Bootcamp then. I would. See how you get on with the Bootcamp. If you've got 2 years worth of study under your belt already, you might find the Holy Grail in there. You won't find the Holy Grail, it doesn't exist, but you might find the whole purpose of me putting this out there was to give you all of my light bulb moments. Yeah, you know, when you're learning, not just trading, but specifically in trading, but in anything that you learn, you have light bulb moments. You suddenly go, I see. That's why whenever I put it into reverse, the car goes backwards instead of forwards. I wondered why. That's obviously a very simplistic light bulb moment, but there's a lot of those light bulb moments in trading where you go, if I did it the other way around, it would work better. What this course is designed to do is to explain how the market works under the hood and what really will help analyze what works under the hood. It gives you a load of strategies as well, which will and won't work, but they're designed for position trading, which is a type of trading. Yeah, which is not a stop loss scalp swing strategy. It is a long-term swing strategy, but you can execute a long-term swing strategy on an hourly time frame with a 5-minute entry. The long term on the hourly is just not as long term as on the 4-hourly or the daily, is it? So this swing that happened here, yeah, happened on the hourly chart. Yeah, it happened from there. It also happened on the 5-minute chart. From there. It also happened on the 1-minute chart. Yeah, so that is a swing high. But the position trading strategy uses swings in a different way by removing the element that everybody gets killed on, which is timing. And that's the thing that everybody, and like you've just said there, you want to be comfortable to trade and find a profitable strategy. Every strategy is profitable. The problem is the traders can't, not every strategy, but the vast majority of strategies you've come across so far and that you will come across will be profitable. The problem is, as a trader, you won't be able to execute them because mentally you won't be able to do it. This, I mean, I've just run a back test in here. The strategy on this, is it finished? Yeah. So, you know, this has got a 71% strike rate. If I give this to 10 people and tell them to execute this strategy manually, I will get completely different results. Some people will make a massive loss with this strategy that works, right? And they don't make a loss because the strategy doesn't work. They make a loss because they're unable to execute the strategy properly, because when something gets into profit by $500, they close it because they go, oh, I lost $500 on my last trade, so I need to get that back. If you hadn't have done that and let the strategy's edge play out, you'd have made $2,500. This is the bit, the person, you are the one that stops the strategy working, not the strategy. If you were to literally just sell every RSI extension to the upside and buy every RSI extension to the downside, you would make money. But you won't, because what you will do is you will buy the RSI extension to the downside, and as it moves up and you see a bear candle going, you'll close the position out. That's a bad example because obviously this is against the trend, but let's try and find an hourly. Yeah, so just to explain it, you will see this RSI extension, you will take it short, it will go down to a double bottom, yeah, and you will exit here because you see it bounce off the double bottom, and you'll get out. Your stop is here, it returned to here, and then it moved down to there. Your TP was here. Yeah, so you had a beautiful, huge 15 to 1 risk reward, but you got out because one candlestick went against you. The EAs don't do that. The back testing doesn't do that. The strategy doesn't tell you to get out here. It tells you to get out here. But you are the one that ruins your risk reward. And that's how you look at risk reward. Risk reward is a long-term measurement of when you have traded for 6 weeks, your average stop out was $100. Your average profit was $300. So your risk reward was 3 to 1. Sorry, that's not right, is it? 3 to 1 is your risk reward. Yeah. Don't use risk reward to get in and get out with that. Get in and get out of trades and then measure what your risk reward is on your strategy and you as a trader over a period of time. This is what the market should be teaching us to do with risk reward, not teaching us to get in here and then put your stop there and then put that at 3 to 1. And if you can do that and hit a 50% strike rate, you'll make X. You can't do that because, first of all, the market might not get to it. And secondly, you'll take it off way before it gets there because you'll be panicking when you see $500 profit in your account. And you'll want to put it in the bank because it's actually something you can use to pay your car payment this month. Psychology, again, is totally different. I don't teach psychology. And that's why I develop EAs. This is why I'm in the trades I'm in now because the EA has got me into them. Yeah, I'm sitting in this profit now because the EA got me into these trades and I haven't been watching them, and I'm letting them play out because that's what the edge is. I know the edge is there. It's just if I watch the chart, I will be tempted to jump into oil now, right, and close it. Why? Because I've got $500 on the table. But why should I close it? This is where I think it's going. That's what I've set the thing to do. So let it do it. Here, right, prime example, psychology. Look at my TP. Look at price action. Should I close this trade? There's no answer, is there? If I close it now, I'm going to make money. If the thing that will annoy me is if it does that. So should I close it? Yes. That difference there in a back-tested strategy is the difference between a profit and a loss. If a strategy needs those extra 20 pips or whatever that is to actually become profitable and give a long-term edge, I've just ruined the edge. This isn't a strategy that's been back-tested, but it's just me. But, RSI extension, everything is telling me right now, we're at ADR, RSI is over the top. What normally happens after an RSI extension? Yeah, should be getting out, shouldn't I? So I'm going to do it. I'm going to take one off because I'm so close to my TP. But any strategy testing you do will not do that. Yeah, that's what ruins it. Strategies. That's why the Holy Grail doesn't exist, because no one will execute anything. You as a trader, you have to trade it yourself. You can't rely on full automation, but also you can't rely on full manual. You've got to have a combination of the two, in my opinion. You've got to have something that gets you in on your edge so that you don't miss those opportunities. This never misses an opportunity. This sits here and waits for opportunities, and it gets me into opportunities. I get myself out of the opportunities by, once this has got me into pound New Zealand, looking at pound New Zealand and going, all right, where do we think pound New Zealand's going to go? Well, I'd be an absolute idiot if I didn't think there was going to be a load of limit orders sitting down there. So that's where I'm going to get out. But what I didn't do was get in there with a stop loss there and a TP at 1.5 to 1. Because that's where it's more likely to go to, or collapse out the bottom. A lot of people will be sitting on this now without a TP there, and they'll be thinking, right, where's this going? Down into here. Yeah. Again, what I do and what someone else in the Telegram group does with that trade, totally different. Everyone is going to get different results. And this is what I say, if I give everybody this strategy that returned 159 grand in profit over a year and did whatever it did, they won't get those results. And that's life. That's trading. You are the trader, not anything else. It's an individual thing. You need to find your own way, and that's what that is. That is basically me dumping my 15 years of journey, and this is what I've found out, and this is what I think works. If you don't like it and don't think it's right, don't use it. It's just the way I see it. But it's going to be totally different to everybody else. Probably because I make money. And that's the thing. 85% of people don't make money. You know, I've done this many times in here before. I've shown this. The statistics are published here. Look, 82% of retail investor accounts lose money when trading. Yeah, 82%. It's more than that. This is just with Axie. 82% of the people that actually place trades in this company and this broker are losers. So that's why we take the opposite side of their positions with intraday. If retail are saying, I'm long on Aussie CAD, what do we want to be? Short. Yeah, retail's long this thing today. Coming down. At the moment, it might go back up again, don't know. But as long as they're short, or as long as they're long, basically, we know that there are orders sitting here. Why? Because babypips.com teaches you when you go long to put your stop underneath the low. So if you're a market maker or an institution looking for liquidity to execute the orders for your clients, and you know that's where you can get your orders executed, that's where you'll take the price to get them executed. You get the dealer desk to move it down to there, and the investment desk will execute its orders. Then the speculative desk will take a long trade based off of the movement down there, because they know that the commercial desk has finished executing their orders, and therefore we're going to get a pullback. Yeah, we haven't got that information. We're not a bank. The banks can't lose. We can. 84% of us, or whatever, do, because we don't know what goes on under the hood. That's the important bit. Babypips.com will teach you about all the other stuff. Moving averages. What is a candlestick? How is a candlestick made up? What is a bar chart? How is a bar chart made up? What is a line chart? All that stuff. What is a time frame? What is multi-time frame analysis? All that. You've got to know all of that. Because if you don't know all of that, you're never going to understand the rest of it. Sorry, that was a long waffle, wasn't it? But it's it's an important one. Thanks for the feedback. Can help. Sega, I bought ORB on MT4. Can the demo version on MT5 be used for testing to make set files for MT4? Yes. So if you just go into download the demo in MT5, obviously do whatever you want to do with your inputs, and then test it, back test the strategy. When you've got something that works and you're happy with, literally just, you can't export this. You can save this file, but it won't work in MT4. So literally just what I do, and this is what I do all the time, is I take a screenshot of it. Obviously, you can't see it all, so I will make it bigger because I've got a big monitor it all fits on. But if you need to take 2 screenshots, take 2 screenshots. But just screenshot it. And then what I do is I just stick this on another monitor over here. And then just go into NT4 and open up the settings, just enter them all. Yeah, you can do that. With any EA you're thinking of buying, always download a demo. And always read as well. Nice selling on cable. Yep, very nice. Back one into profit there. I've just closed out that oil, so that's helped. Need to get some profit back today. But this is typical position trading, yeah. So, you know, one ADR hit to the downside on pound US dollar, this thing's sitting at $2 in profit. That's just grand scheme of things, we're sitting in 1.15, but as I say, about 800 quid of this is mucking about with EA testing. So we are getting that US dollar strength by the looks of things starting to come through now, which is good. Euro US dollar is about to give a reverse alert, so I didn't manage to get up to my level on that. But, you know, just because it's going to drop, this doesn't mean we are starting to move down on this pound US dollar. We may well still come back up and retest this area. So nice if it does. DAX still not going anywhere. Oh, a horrible day today. So I'm just going to sit in this DAX basically, trailing stop on the shorts at the moment. So just reducing risk a bit on it, but not going anywhere. So basically we've got this propulsion gap at the moment, which we're just literally, so this is, this is all explained in the ORB video, which is now on the website, by the way. It's on here. So this is part of the theory playing out, basically. So this is the opening cash balance. So this is the dump of orders from the institutions. And at the moment, what we're seeing is there is no speculative buying or selling. So this is contract orders being placed, i.e., please buy or sell a load of shares for me, Mr. Bank. And then the speculative desk will move after those orders are executed. And that's the real trend for the day. We've got no speculative orders. So all that's happening is all the shorts that have been placed today, they're adding into the shorts. But there is no buying pressure and no selling pressure. So we're just seller heavy at the minute. But that will change on a dime as soon as the next order is executed by one of the big banks. We, again, coming back to the not a clue who is going to press the button next. Out of our control, isn't it? So either these orders are going to work or they're going to stop out. And if those orders stop out and they decide to go with a long trend day, I'll get in long. I don't know. So why guess? That's the 5-minute time frame, isn't it? The why guess time frame. Go where the price is taking you. It's all short at the minute. Short. Well, it's nowhere at the moment, isn't it? Right, I'm going to go now. It's 10:40. I'll be back at 12:20 for the New York session. We'll see how we get on in New York. Hopefully we get a bit more movement. But as I say, we've got no news today to move the market. So we may well have a bit of a flip-floppy day today, waiting for Powell tomorrow. So as soon as we got that out of the way, we'll be straight into all the CPI figures, which will definitely move the market at some point. So we're forecasting increase on Aussie CPI And we're forecasting a drop, significant drop yearly on the US CPI as well. So again, this could be a negative US, but we'll see what Powell says tomorrow. Okay, have a good one, guys. I'll be back at 12:20. I will see you then. If you need anything, come in the Telegram group. I'll be in there, and I will be doing back testing and answering DMs mostly, as I can see there are a few already. So I'll be in there, and hopefully we'll see you this afternoon at 12:20. Have a good day.